Yes, as we always say when we start our session, the discussion would be purely educational. The idea of this spaces is to so as to learn and educate you people, not any buy, sell, or hold recommendation, nothing for or against any company. So this is a discussion in good faith, how we can apply our technofunda things so as to place ourselves better in the market. And anything you want to say, Saurabh?
No, thanks for highlighting, Prince. So, because we are talking about FOMO, usually the discussions are more around buy, but I think this is the spaces where the discussions will be more and more around sell. And we'll be talking about a lot of stocks from sell perspective rather than buy. So, please don't feel bad for it. I mean, I don't have any love or any hate for any stock. I am just being totally unbiased and totally data driven. And even if I am invested in some of the stocks, it doesn't matter. The idea is to bring out the framework, the approach, the insights, the examples, rather than having any biases. So please don't mind for any of these discussions around any stock or market or sector or index or whatever.
Exactly. And guys, like I have pinned the thread by Kumar Saurabh, and you guys can surely have a look at it as and when you get time. So he has tried to summarize all the tweets, timely cautions for the retail investor, which he did time and again. So that has been pinned to the spaces. So Saurabh, let me take a moment to thank you again, first of all, for agreeing to doing this again, and for those, I mean, those who are new to his handle. So let me take a moment to introduce Kumar Saurabh. Has a very rich experience, and he clubbed technicals and fundamentals and momentum style of investing. And if you check his handle in the past, you will get to know the great and timely insights shared by him, which was basically so as to caution the retail investors who were I mean, out of FOMO, running after the names which were doing rounds on social media. And Saurabh is founder at Scientific Investing, and he has been sharing quality content at Scientific Sharing or Scientific Investing, and he also runs a YouTube channel by same name. And the rich content is freely available to everyone. So those who are yet to check may kindly check. And yeah, so welcome, Saurabh.
Thanks, Prince. Thanks for the kind introduction.
Right. And guys, like there is a little modification in the style of podcast video. So initially we'll be listening our guest for initial 20-30 minutes so as to uh, learn about the topic thoroughly. And in case we have any questions around that, thereon we will open the floor for questions so that we can learn about the thesis seamlessly. So Kumar Saurabh, all the podcast is all yours, and you can start, please. Thank you.
Sure. Thanks, Prince. So first, welcome everybody for attending. I can see some of my friends here. Manish Bhai is there. Janak is there. So thanks all of you for attending. And it's an interesting topic because usually we talk of buy, but today we'll talk more about sell because the topic is FOMO. And as Prince told, I have a techno funda background. I come from a dual finance and data science background. So that is where the domain knowledge of finance and the skill of data science to look at data unbiased, whether it's a trading data, whether it's a fundamental data, and that has been the reason behind having a hybrid approach. Now coming to today's topic, so again, as Prince said, what I have done is I have created a Twitter thread. I have created a Twitter thread where in last 2 years, most of the tweets which I have made around FOMO, lot of those tweets are there, and I will use lot of them for discussion so that the discussions are more use case based. The discussions are more insightful and applicable than being a merely gyan session. So that is where I will use those thread tweets. So look for the latest tweet which I have made some half an hour back, and that thread we will be using. Now coming to FOMO, so I will divide it into three, four parts. What kinds of FOMO exist in market? Why FOMOs happen? What are the signs of these FOMOs? And again, I will try to break into fundamental science, technical science, psychological science, quantitative science, and all of that. And I will try to exemplify taking some of the examples from those threads, how and why it happened. And then we will open it for discussion and let's have as many questions as possible. So first thing, FOMO can happen in multiple ways. There could be market-based FOMO. So like there could be FOMO around investing in US or investing in Nasdaq, or a country as the next best opportunity, and it has happened in history. Then there could be asset class FOMO, like crypto was, a recent example, and many times in equities itself it gets created. And because most of us we are equity related investor, if we get detail more granular into equity, there are FOMOs related to sectors, there are FOMOs related to themes, and the history is there from 90s, like your ID.com bubble happened in 99 2000. There was big NBFC bubble which happened in 95 96. Then there was a infra real estate bubble in 2007 8. Then there has been a pharma bubble. In last 3 4 years, there was a housing bubble in 2017. Then there was a micro cap bubble, and then recently we have seen bubbles in the form of platform and whatnot. So there are various kinds of sector and themes, and people who come at the end of the cycle, and if they don't exit on time, they end up losing 50 60%. And then the third, there is a stock level FOMO, where there is too much of storification beyond a point, and people get trapped in stocks. So if you look at top down, there are various levels of FOMO, and if we are not playing the game to our advantage, there are chances of injuries at various levels of investing, right from the country to market to asset class to sector to stock. The next thing is why FOMO happens, and my observation has been there are multiple reasons why it can happen, but the first and foremost reason is lack of preparation. And when I say lack of preparation, any kind of investing, it requires a lot of preparation, whether we are investing in a stock or we are investing in a sector or we are investing in a ETF or we are investing in a one particular country fund or any theme. Lot of preparation is required. Whether we are a fundamental investor or whether we are a trader, technical by nature, both needs lots of hard work. In terms of fundamental, it needs a very solid understanding of risk, a solid understanding of valuation. Because when everything is good, there are statements which are made like valuations doesn't matter. If you stay invested for 10 years, you'll make money. But only when things fall apart, then we realize the mistake, or when stock already falls 50%, and then after that some risk gets triggered, and then we realize, okay, this risk has happened. But ideally those risks should be studied in advance. Ideally, what is the price at which one should exit, because there is a chance of 50% falling because the valuations are not in favor. That should happen in the beginning. So lack of preparation is the first reason. Lack of process is second reason. When I say lack of process, what I mean is, many people, they enter into a stock thinking, okay, even if it is overvalued, let me play with the momentum. But when the price falls, they think, okay, I will sell after if it falls 5% more and 5% more. Actually, they don't stick to their discipline. The first place, the whole thesis itself is wrong. You have to know whether you are playing for value or you are playing for momentum. If we are playing for value, we have to look for margin of safety in the valuation. If we are playing for momentum, we have to have a very strong entry and exit process. So if we don't have a process, or if we keep tampering our process, or if we keep switching our process from process 1 to process 2, style 1 to style 2, it is not going to work. And many times FOMO happens because we don't own a process of ours. And if we don't own a process, then we have to be extra cautious. But we don't maintain that kind of caution. The third reason for FOMO is, most of the times it's our human behavior and envy and greed. Because I have done these mistakes, and most of my mistakes of FOMO has been either around envy or it has been around greed. And all said and done, some of the human characteristics are very difficult to change. In fact, I was part of a lot of WhatsApp groups, and many times what happens, there are weeks or months when you don't make money, And when you see other people making money like crazy, whether they're making in real thing, I don't know, but when you hear others making money, you start questioning your own process, or you start thinking, okay, let me also play a little bit and let me make money here. So many times, despite of having skills, still I will end up putting some money, in some stock, which somebody is recommending. I know this guy is good, and the moment you put, the stock starts underperforming. So having that discipline and controlling the emotion is very, very important. Controlling our greed is very important. If our process is telling that we have to sell, but because the whole market is gung ho about it, many times we kill our process and then we pay the price. So emotional lack of emotional control in the form of envy, greed, these are other reasons why FOMO happens. The last reason I would say why FOMO happens is because of lack of understanding of market cycle, and this is something which needs lots and lots of experience. It doesn't happen over 1 year period, and many times if you see the current market, almost 40% of investors, they are less than 2 3 years old. So market cycle is very important. Even though we don't make a mistake, we because we don't understand how things work, we don't realize that we are making a mistake. So if we are playing a cyclic industry, and I have seen it happening again and again, sometimes it will be your typical commodity companies, sometimes it will be sugar, sometimes it will be textile. It's very important to understand the cyclicity of the sector, the cyclicity of the industry, the revenue cyclicity, the margin cyclicity. I can tell you many companies, if you pick, the margins will fluctuate between 10 to 20%. And at 20%, if you look at the company, the ROCE will look good, the leverage will look good, everything will look good. You will think it's a quality company, the 3 year return on equity is very good, the sales growth rate is very good. But actually the company is at cyclic peak. After that, your revenue is going to fall by 20%, your margin is going to fall by 50%. So because all that fall is going to happen, your price will fall by 50%. And the problem happens because we don't understand the sector cyclicity. We end up entering at the top and then holding the basket. The other thing is the market cycle, the whole cycle of the Nifty or stock market itself. Market also works in cycle. And even though it is not something which is driven by greed or envy or lack of preparation, you can say, but we feel that we have done our work, but it requires much deeper work. So anybody entering into sectors which are highly volatile, which are highly cyclic, we really need to think if we are just entering because everybody is talking about it, or we understand it well. And the last one is too much of storification, and it has only got worsened with the advancement of social media, because earlier we only had money control board, I mean 15 years back, but now we have YouTube, now we have Twitter, now we have Insta and whatnot, Telegram groups, WhatsApp groups. And when stock is not doing well many times, and of course there's no right or wrong approach. Value investors also make money, investors who respect margin of safety also make money, investors who are momentum or traders who follow momentum, they also make money. Those who can buy 52-week low stock, if their process is right, they can also make money. Those who buy 52-week high, if their process is right, they can also make money. But what happens is nobody will be interested. We will say we are investors, but we will not be interested to even study stocks where there is a lot of correction, but we will buy momentum stocks where there is overvaluation. And not all 10 momentum stocks do well. Two stocks, they will keep doing well because there is still enough value, there is still enough growth. But there are 7 8 companies, some of them will be cyclic, some of them growth will taper, some of them the momentum will go much ahead than valuation. And in some, maybe it's sheer supply, because somebody who got in at the early time, he has made a 4 5 bagger, he would like to exit. So if there is enough supply and not many buyers, again a top will be getting created. And those are the times where you will see a lot of Twitter threads, lot of storification. And I'll give you enough examples in terms of platform companies, IRCTC. In fact, some threads I wrote because I found the kind of valuation price discussion, not valuation, the kind of price targets were given, they were absurd. No valuation justified it. And that is why I wrote some of those tweets. So the storification leading to the kind of psychological impact that, okay, this is a lifetime opportunity and I should not miss it. And even though we feel that, okay, things are not in favor of, a very basic back of envelope calculation can tell, the story, it's too overvalued. But then we believe in, buy at any price and quality at any price. So these are some of the reasons why FOMO happens. And now talking about the signs of FOMO. So first sign of FOMO in terms of fundamental, a very simple exercise if you do, you will see your valuation. Valuation will always be a band. Any company, when you pick last 10 years of 15 year or 20 year of data, whether you're picking a company data or you're picking a sector data, you will see it works in a band. Maybe at bottom of valuation it might work, and I don't know to get into different kind of valuation metric. Whatever valuation metric you take, depending on the type of business and financials, whether it's price to sales, EV, EBITDA, cash flow, doing a DCF, there is a range. And whenever there is lots and lots of correction, everybody is scared, those valuations will be much lower than their historic mean. And whenever there is too much of euphoria and froth, they'll be the upper band of their historic mean. And I did a webinar on valuation, some 4 5 hour webinar, and I had taken a lot of example. In fact, my observation was there is a technical analysis in valuation bands also, and there are a lot of examples if you see. And valuation is not a static concept, it's a dynamic concept. Depending on the structural changes of business, the valuation also works, and hence you get re-ratings and de-ratings. But still, in a generalized basis, when you see, these valuation bands still work, and the probability of success at the upper end of valuation bands is very less, and the probability of success at lower end of valuation is still decent. So whenever you incur these kind of signs, at least you have to be little cautious that if the company or the sector is trading at the upper end of the valuation band, at least some caution is required to understand if this is sustainable because of some structural change, or nothing has changed, it is the high cyclicity upper end of the market euphoria. Or many times there is too late entry in popular stocks. So even if you read technical analysis, we talk about stage analysis, and in the stage 2 there are 3 4 big breakouts which happen, and through these 3 4 5 big breakouts, you get somewhere a 50% to 500%, 800% kind of move. And once all of those breakouts and all of those things have happened, then stock consolidates, distribution starts, it starts topping out. So if we are too late to enter in these popular sectors again at higher valuation, the chances are that we'll burn our hands. And that is why the sign is, we have to look for how many rounds of uptrend has happened, and then breakouts have happened, and then we should try to match with the valuation. If the valuation is still attractive or fair at least, then many times when the market gets into a FOMO stage where people try to enter with unlimited kind of money, everybody wants to make money in the market, and the typical barber stories, and your colleague who has never invested in market, he will try to invest. Or in 2007, Reliance Power IPO was highly talked about. After that, the next IPO I saw most talked about in the company, because I was working till last year, was Paytm. I mean, in my company, I never heard stock discussions with colleague, and Paytm was one stock where again I saw some kind of discussion happening. And then you see a trend of bhangar caps, lot of penny stock, bhangar cap stocks. They also start doing circuits and all. Most of those stocks being, above their 20-day moving average, above their 200-day moving average, above their 50-day moving average. Then the other sign of FOMO is there is a recent bias in picking quality, and I see many investors getting stuck here. In 2020, it was pharma, that pharma is the best sector to invest. There is no other sector like pharma. In 2021, IT became the best sector to invest. As of like, IT sector never existed in the stock market. Achanak se prakat ho gaya hai. So what happens? These sectors are same. These sectors are there from last 15-20 years. But something happens because they generate lot of return, the growth. The problem is, whenever this phenomenon happens, many times part of that growth is because of short-term tailwinds. Those growths are not very structural, and stock market and life is same. We have a good phase and then we have a bad phase. Again, we have a good phase, bad phase. Businesses are also same. Sectors are also same. They go through good phase and they go through bad phase. Again, if you go through companies which have done 10%, 20% growth rate continuously for 10-15 years with margin expansion, you'll find very few companies. In fact, that is what the book Coffee Can is there. You could find very few companies. But the problem is, we assume every good company and every good sector to continue to do that. And the bigger problem which happens, first, many of us, we enter at the high period, but the bigger trap happens when the stocks start correcting, because the recency bias comes into picture. Oh, this was a great stock and this was a great sector, and this is corrected at 20%, so I am entering at a very good valuation. And again, there are lack of preparation comes. A 20% correction in price doesn't mean the valuation is attractive. So as investors, many times we tag valuation attractiveness as a price correction, which is not the right way. And many people get trapped, and that is why I many times I highlight shareholding data. Like if you take example of Aarti Drugs and many such companies where the count of shareholders went 10 times. Why? Because 2 3 times it went up when it was a late stage of uptrend, and when the correction happens, the correction first traps those late entrants, and then lot of new people, they keep getting added because they feel, okay, it was a quality stock, it has done that great kind of growth rate, I'm getting it cheap. And the new and new people keep getting added, and whereas sellers, they keep throwing the stock lower. So these kind of recency biases of picking quality, and many times even the high quality stocks, they go through multi-year correction. It has happened with HUL in 2010. It has happened with ITC in two occasions. It has happened with Reliance. So those kind of things happen. And in the US market also, it has happened. There was a quality bubble which happened in 70s, and those companies, all high quality companies, and they couldn't make money for next many years. If we look in terms of technical, so what happens many times in FOMO, people nibble stocks at distribution cycle, and there are multiple ways how distribution happens. I will talk about few examples. Like if you see charts of IRCTC, charts of IEX, you'll see a very exhaustion kind of move. Exhaustion move is one where, in a period of 15-20 days, the stock goes up by 50%. Or you will see a very big needle getting created at the top, if you know what a candlestick is, which means the sellers have dumped the stock, and somebody who has come in the end, he has taken all the stock, and then that needle sale, that the sellers dominated the market. So those are the ways distribution happens. Or there's a typical very price based distribution will you will see in terms of, if you understand what is a trend uptrend is when prices make higher highs and higher lows, and downtrend is when prices make lower highs and lower lows. And very simple visual analysis of chart will say the stock is making lower high and lower low. So you can see those patterns, and those are distribution patterns, but we are so much married to the story. This has happened with Mastech. So again, if you see that thread, I am talking about these stocks. It has happened with Mastech, it has happened with Saregama, it has happened with Loris. But because we are married to the stock, we think, okay, we are long-term investors. See, if you are a long-term investor, and if the valuation is so high that prices can fall by 30%, then you should not get surprised. It's okay to be a long-term investor, but you should be mentally prepared to take a 30% valuation, price cut. But if you are getting surprised by 30% price cut, so either you can be a long-term 10-year investor, but then be prepared to take these kind of 30% drawdown. But if you don't want to take 30% drawdown, then you have to be prepared, and then you have to exit at the right time. Also, very simple examples. So froth happens even at a sector level, index level. Look at NASDAQ. So if we look at NASDAQ, one example, one study which I always do is I look at the 3-year, 5-year CAGR of that index, whether it's a small cap index, whether it's a NASDAQ index, whether it's a large cap index. And most of the times you will see any index has given a return somewhere between 8% to 20%. If you look at Nifty, your CAGR will be around 12%, mid cap, similar numbers. So basically, that is the mean return. In long run, that is the kind of return you will make. So if you are making a 25% kind of return in last 3 or last 5 years in terms of CAGR, it is highly unlikely that in next 5 years you are going to make the same kind of return. It's a very simple price analysis, unidirectional analysis, no fundamental. And when in the last 5 years you have made hardly 3-4% return, and if the GDP is growing at 7-8%, if the 12% CAGR kind need to be maintained, then there are higher chances that you will make more returns in next 4 to 5 years. And I am highlighting more as an investor. As a trader, the game is very different depending on what kind of trader you are there. But I'm talking some of these things purely from a long-term investment perspective, where we look for margin of safety. So these kind of simple analysis, even if you look at NASDAQ, still, I think the 5-year CAGR of NASDAQ is not that bad. Still, it is in lower double digit, maybe 11 to 13% somewhere there, which is not that bad. And at the top, it had gone 24-25% plus. Again, if you go through history, if you plot last 5 year and next 5 year performance of the price every month for last 20 years, you will see a lot of patterns where at the higher band, whenever the returns are more than 2x of the mean, you get tops created, and next 3 5 years are very bad. And whenever your lower band, the last 3 5 years of return are much below the standard mean, that is where the turnaround happens, and the next 3 5 year returns are very good. So you call it quantitative analysis, you call it chart analysis, price analysis, whatever, but these are the symbols. So again, how to identify patterns? So if you go through the thread at a market level for small cap, because in 2021 small cap was in a huge bull run. So there is another data based on 17 years of small cap index. There was never a 25-month continuous period when small cap index didn't correct by more than 15%. And we entered into 15th month, 16th month, and these tweets are there from July 2021. Finally, when we entered into January, we hit 22 or 23rd month, and then we got a 15% plus correction. So all these are patterns, history, probabilities. It's not about predicting कि मेरे को top predict करना है, bottom predict करना है. We have to act based on probabilities, and when probabilities are extremely out of favor, that is how we should take when to take a call on sell and exit. When probabilities are highly in favor, we have to take a call on allocating more, and we have to look for multiple signs, whether these are fundamental signs, quantitative signs, behavioral signs of Google Trends, word trend analysis. There are videos on YouTube where I highlighted some of these Google keywords, and there are technical signs, the chart analysis, the simple trend analysis. And when all of these things are saying the same thing, the probability of a market top or a FOMO or a bottom, all of these increases, and that is how we need to act. So this was my summarization of what is FOMO, why FOMO, what kind of FOMO, signs of FOMO, technical, fundamental, with some of the examples there through the thread. I will pass it to Prince, and Prince, I think if you have any question or anything more to discuss, okay, else we can open for overall interaction with the listeners.
Yeah, we already have two speakers, so one by one we take that. And to our attendees, like if you have any questions around today's discussion or anything related, please feel free to send in a speaker request. And also, I see many familiar faces: Shekhar, Shubham, Manish. Even if you want to ask something or maybe in continuation add something, please feel free to come. So yeah, Vineet, you go first, and then we move to Pramesh.
Hi Saurabh, Happy New Year.
Hi
So,
Vinit bhai, Happy New Year. Glad to see you here.
same here, same here. Saurabh, great session. Again, I am not a momentum investor, neither I look at the technicals much. But after listening, what I am able to decipher, or maybe I'm wrong, it's a question to you. The bubbles which keeps on happening in the market, do you think that the momentum money, the money which chases the momentum, keeps on shifting their goalpost from one sector to another, and hence, if momentum loses, they exit and then they enter into another sector which is into the momentum. So, do you think it is a good strategy to do, or does this actually happens? Or there are a couple of 2 3 questions around it only. So number one, does it happens? Number one. Number two, is it a good strategy? Number three, how to do this if it can be done? And does the momentum investing includes 200 DMA, 300 or whatever 50-week moving average or whatever? What is the best way to capture it?
Okay, thanks, Vinit. Thanks for the question. Very interesting one. So my view, see, first when it comes to momentum, even in momentum, there is a short-term momentum, there is medium-term momentum, there is long-term momentum, and it depends on individual definition how we define momentum. But to your question of money rotation does happen on the short-term momentum, but there are institutions who play the long term game also, and they play it for 1 to 2 years, and then they do a sector rotation. So we have different kind of traders in the market. There are traders who work on short term rotation, maybe every 2 3 months, or maybe every 30 days. Or if you look for somebody who is Mark Minervini kind of investor, he might be invested for maybe only for 10-15 days, just to capture the breakout, and then or sometimes play the trend till the rules are not broken. And then you have trend following investors who ride the whole trend based on their exit rules. So it's very specific to what is your process around momentum investing, what is your entry criteria, what is your exit criteria. There are people who play with only 6-7% kind of stop loss, with whatever methodology they're building their stop losses. There are people who look at daily charts and then they build their strategies. There are people who work on a weekly charts and they build their strategies. So
So
even momentum
allow
as
me, Saurabh. Actually,
yeah,
we
yeah.
are digressing. We are digressing. My question was this: that there are different bubbles happening every 3-4 years in the market. So you mentioned there was NBFC, there was real estate, there was infrastructure, there was a telecom in the past, and hence every 3-4 years there is some or the other sector which is exuberant at a time. So most of what I meant was when I say, can this exuberance be captured by any strategy or by using any momentum method?
Got it, got
Is
it,
there a way to
got it,
do
got
it?
it. Yeah. So see, one simple thing which I can tell you is, if you look at the participation, somebody has to sell. So whenever there is a bubble, those who are there in those sectors from the early, they have to make a exit, right? So they have to sell to somebody. In most of the sectors, if you see the people who are late in trend, they will be stuck. And how do we find patterns? So first, in fundamental, you will see, again, I will go back to the same basics which I discussed. The valuations will never get justified. And the second thing is, many times it happens at the peak when everything is going good. And the bad news will come only after 3-4 months, but the price will start showing it. So slowly you will see the kind of relative change in price which we had in terms of every 2 month of price change. That kind of price change velocity, that will slow down. Slowly you will see the sector leaders and many companies in the sector, they will start making that top and the correction will stop. You'll start seeing some kind of the same trend, lower highs lower lows formation. You will see that kind of happening. So let me highlight this with an example. So if you see the IT sector, because it was a theme which played well for 1.5 years, or the second example I will take for textiles, so that I can give examples of all these signs. So first take IT sector. If you take IT sector, the institutional selling in IT started happening in September, October. And there was a news which came, that the first news which came, that people will go back to the offices. Now if you see why IT sector fundamentally performed, because first, because of working from home, the whole cloud business went up and the revenue growth happened. But there was another big reason why it happened, because the margins of the companies went up. Why margins of the companies went up? Because the travel, there was no travel, there was work from home. So your travel expenses, your marketing expenses, your operations and maintenance expenses, all of that got reduced. And because of that, you saw a shift in margin expansion. But think of this news the moment it comes, that companies are opening and people are going back to office. That means your margins will come back to normal. So there will be a fall in margins. And then you have a valuation which we have never seen ever in last 20 years after the dot-com bubble. And then there's a growth where the cloud growth, which has to happen for 10 years, of course, a part of that got captured in 2 years. So you may not see that kind of growth coming again in in immediate next 1 to 2 years. So whenever you have a extraordinary expansion of margin which is not sustainable, extraordinary expansion of valuation which is not sustainable, and extraordinary expansion of revenue which is not sustainable, and we say now, buy on the rumor and sell on the news. So the moment I saw that news, that was my first hit, that looks like, okay, this is done, it's over here. And then I was continuously looking at chart. And then if you look at chart, there were signs like Mastech was one stock where I have highlighted. So technically, then you have to understand how the tops and bottoms get created. So there was a clear cut triple bottom on Mastech. And then slowly you would see that IT index, it tried to cover that high again and again. It was failing to cross that high again and again. And that is how the top got created. And then if you look at the shareholding data, I mean, even if you have exited in the first quarter, second quarter, third quarter, fourth quarter, the institutions kept on selling and the retails kept on adding. And now even the DIIs are adding. But lot of that correction in the early phase, that was taken by retail investors. So that is one example, and all these reasons how we can identify it. The second example, if we take textile, we know textile is a super cyclic sector. I mean, there was a time when we used to tell ki textile ka koi future nahi hai. Bangladesh kind of countries can also come and eat Indian textile market. Then what special has happened that textile is going to boom forever? And the same thing happened in textile. Even one example of stock I will mention is GHCL, because I posted few days back, and GHCL also has a textile business. These companies, because of the high demand in US and Europe, these companies got kind of margins which they have never got in their lifetime, and mostly peak of the margins. So in such a super cyclic sector, at peak of margin we have to sell and run. Whereas euphoric stories were being written that it is India's manufacturing story and this and that. The third, if you look at the debt equity data of all the sectors, textile is the worst sector. Every sector, when it goes through its golden period, they are able to strengthen their balance sheet, strengthen their cash flows. Textile is one sector where, in terms of leverage, even its golden period 5, 6, 7 years back, it was not able to improve its balance sheet except few players. So when we see, when IT is not that kind of cyclic sector, textile is super cyclic sector. But still, if we follow the margins, if we follow all that revenue trajectory, and then if we follow the price, and all the stocks showing, some stocks showing exhaustion move and then correcting, making lower highs, lower lows, and then after quarter, when the shareholding data we see the institutions are selling, because the big guys, they take the prices up. So these are the signs we have to look for, and when all the signs are confirming, depending on the nature of business, nature of cyclicity, we should make a call on the exit, and that is how bubble gets top out, and when the institutions they exit, the bubbles burst. So I hope,
Right.
Vinit, now I have answered, or
Yeah, Saurabh, that's fine. It's a longer discussion. Probably whenever I meet you sometime, we'll have a longer chat on it.
sure, sure.
Yeah. Thanks, Vineet. So, Pramesh, you can go next.
Hi, Saurabh. Happy New Year and Happy New Year to everybody in the space. Happy New Year to you, Prince, too. Saurabh, my question is with respect to you mentioned on the valuation part, that valuation peaks at some point in time, then there is a correction which comes. It could be 10%, 20% also. And that is where, probably as a retail investor, I would like to know that if there is a correction of 20%, say 30% also, and that is where you mentioned that most of the retail investors get trapped. Now, how do I avoid the trap at that point in time from a perspective of looking at what kind of parameters do I need to look out for? I don't need a perfect answer, but I need at least to look at some pointers, or something to do with some amount of data that I need to look at in terms of knowing that, okay, this could be a probable trap. I don't. I mean, it may not necessarily be a trap. So that's one part of it, because I have a live example that we have right now is of metals. Metals peaked out in the month of March or April, and then it corrected phenomenally. The entire index corrected phenomenally. Maybe because of Tata Steel or Adani Enterprise also, but it corrected steeply. From 6,800 it went to 4,500, the index, and now it is back to top levels. So I don't know. I don't know whether it's making a double top or not, but this could be a live example. If you can help us with some of the thesis pointers on this, what kind of data points that I need to really look at it at when it went down to 4,500, that what should I have seen it, whether to mean that this is not a valuation trap, or this could be a valuation.
So see, on valuation, first we need to understand what are the drivers of valuation. And again, uh, if we look, there are certain quantitative drivers, there are certain qualitative drivers. In terms of quantitative drivers, of course, the first and foremost, most important driver is growth, because whatever money we pay for the growth and future cash flows. And your growth is driven by, again, your top line growth, your margins, your PAT, and then not PAT, but your cash flow growth. Also, how the cash flows which are coming, they can be deployed on a sustainable basis to drive the growth in a stronger manner, and that is where your return ratios, return on asset or return on investment, ROC, whatever we use, return on incremental capital, all of that comes. This is one part. The second part is more qualitative, where if you see, we talk about HDFC or Bajaj Finance, where consistency of growth comes. So companies which can keep showing the numbers consistently, many times they get traded at a higher valuation. The third part, which is more qualitative, is of course, again, everything can be quantified to a certain extent, but the whole promoter quality, because ultimately, if the market doesn't respect the promoter quality, the big investors, they will be scared to invest and all. So, promoter quality, corporate governance, all of that comes into picture. And then you have sectors which are highly cyclic, sectors which are less cyclic. So that has also to do with consistency and sustainability and volatility. So valuation is a very complicated concept where it's a mix of all these things, and this is only at a stock level. Then how the overall market is doing, and we know that when the overall market corrects, the companies which keep looking attractive, they keep getting more and more correction. So there are many moving parts to valuation, but still we have to simplify it in certain way, and at least we should do a basic exercise. That is what I do, and I can tell. So whenever I do an analysis on any stock, I have, for me, valuation is always dynamic and valuation is always range. It is never a exact price that I have to buy at 1,000 rupee. When I did the exercise for new land recently, when it went through correction, my range was somewhere around 1,200 to 800, because we are talking about future and nobody will know the future. Lot of risks which get triggered, nobody knows whether it will get triggered or not. If it gets triggered, it's a bad thing. If it doesn't get triggered, it will keep on happening. So I need to build my scenarios. So let's say my worst case scenario says new land valuation is 800 rupee. My best case scenario says 1300 rupee. So that is where I start accumulating in a staggered manner, assuming that if I get opportunity, I'll keep buying. If I doesn't, because two things will happen: either it'll come down or it'll go up. If it comes down, I have opportunity to buy more. If it goes up, then anyway I'm making money. Until unless it's something surprising, something new comes which changes the whole story, then the whole thesis changes. So my suggestion would be, whenever we look at a stock, we have to understand the nature of the industry. We have to understand the nature of cyclicity. I'm taking Newland example because it is one of the most non-linear businesses where even promoters don't know what kind of margins they can do in next year. So whenever we deal with these kind of businesses, we need to be extra cautious. Or if you're talking about steel, these are highly commodity businesses, and I've seen a cycle in steel where somebody was comparing Tata Steel cash flows to TCS cash flows. These are two very different businesses. When we look at the consistency of return and uniformity of return on a year-to-year basis, so my suggestion will be, we have to understand the cycle, we have to understand the margin trajectory, we have to see, today Ishmohit and I, we have released a video on Jubilant in Gravia. It took lots and lots of effort to first understand what is the margin band of this company based on, we can't go with 3-year history. And then we realized there is a 10 to 20% margin band, and it's a cyclic business. Forget the name specialty. And then currently the margin is around 12%. So whether it's a shitty business or it's a good business, that is other thing. But if I have to look at valuation, imagine somebody allocating a 20 PE on a 20% margin. That's not the way to evaluate the company, because you are evaluating at a margin which is not at all sustainable. It is peak of the cycle. So first we have to find a normalized margin, a normalized growth rate which is possible. And when we say normalized, so take diagnostic companies, how you can take the 2020-21 growth rate as a real growth rate, because there are a lot of COVID components. So the concept of normalization in valuation is very, very important, whether we are looking at revenue growth rate, whether we are looking at margin growth rate. We need to do, and all of that takes a lot of effort. And then we need to build scenarios of some optimism, some pessimism. And then depending on the quality of business, whether it's cyclic, whether it's a good return ratios, whether the balance sheet is strong, whether it's a good cash flow conversion, whether the promoter is good or not, what kind of treatment he has done to minority shareholder, you need to tag some kind of valuation range. It could be 10 times EV EBITDA, it could be 15 times cash flow to market cap. And then we need to again build that in a range, and then we need to play with our probabilities. The more we get attracted where the prices are offering a margin of safety below our average mean valuation range, the more we should be attracted towards it. And the higher it goes, the less is the margin of safety, and the more we should be worried about it. So that's how I try to do it.
Thanks, Saurabh. That helps a lot. Give some guidance at least. Yeah, thanks.
Thanks, Pramesh, and Happy New Year again. Glad to connect, Pramesh.
Yeah,
Thank you.
same. Same. So, Shekhar ji, you can unmute and go next.
Thank you, Prince. Can you hear me?
Yeah, yeah.
Yeah, Shekhar.
Perfect. Hi, Saurabh. So Saurabh, I think Vineet and Pramesh kind of probably talked about the questions related to the exit side of the story. Identifying the top of the part. So the question that I have for you, hopefully it can help larger audiences. How do you choose the entry points, right? I mean, I have been the first-hand witness to some of the screeners that you run in terms of identifying the trends, whether it was the PSU banks or the sugar space or the agrochemicals, etc. So if you could throw three or four indicators that can help most of us in terms of identifying some of these potential opportunities, that will be great.
Shekhar, are you there? I got your
Yeah.
question, but I don't know. Prince, did you hear in the end?
Can
Yeah, I can hear him. He can come again, Saurabh. So, Shekhar, could you please repeat
yeah.
the last part of the question? Yeah.
Yeah. Saurabh, can you hear me now?
Yeah, your question was how to identify the entry point, but have I missed anything beyond that?
So post that, what I mentioned was that being part of your alumni group, I first hand have had the experience of how do you screen for different sub cycles, right? Within a cycle there are sub cycles. Like for example, I remember screening and giving the indications about the PSU story or the sugar story or the agrochemical story, so on and so forth. So my question was, if you could throw, three or four indicators that can help most of the retail audience in terms of how to identify some of these sub cycles within a year, that will be helpful.
Sure. So I will talk mainly from long-term investing perspective because each of those approaches are very different, different styles, very different, and those detailings will not be possible. So I'll just talk more about long-term investing, where we apply a techno funda approach. So if you look at most of the stock studies I have done in last 1 year, and most of the studies are there on YouTube, whether it's two, three banks which I analyze, or the bank cycle, or the auto sector, or something like Aegis, which is more bottom up investing. The common thing is I was looking at margin of safety. And how does margin of safety emerge? It emerged because there is pessimism. And what pessimism means that the prices have corrected. So I'm just trying to connect fundamentals and technicals because I'm talking about pessimism. Pessimism means company is not doing fundamentally well and hence prices are corrected. And because prices are corrected, now I'm talking about price, which is technical. So somewhere my fundamental system and my technical system talks. So I have scanners to track stocks which are not doing well. Maybe it has gone through 30% correction, 40% correction, 50% correction. But then the bigger question comes, what is there after tracking? It can keep falling and falling and falling. So then if you look at technical analysis, there is different kinds of stage analysis, but I try to focus at a stage where my indicators say that the downtrend seems to be over. So when we say downtrend seems to be over, that means you will see some example where the latest, again I'm going with very basics of technical analysis, the typical the trend analysis, higher highs, higher lows. You will see the stock stop making lower highs, lower lows. And that doesn't mean the stock is going to fly. The stock or the sector can remain like that for 3 months and change its direction. It can stay like this for 2 years and change its direction, or it can stay like this for even 8 years and change its direction. But at least I know from there the chance to lose money will be lesser, and then it creates a fundamental interest. Now again it depends on because you are there in the market for 6 years, 7 years, 8 years, you keep studying sectors. There could be certain sectors where already you have built some kind of knowledge that you know that when cycle will turn and all, and there are sectors which could be totally new, or there could be companies which could be totally new. then i start reading then I start reading more about it. And okay, prices have corrected 50%. Technically, it looks like it is in stage one, but is there still a margin of safety? And that is where the whole fundamental study comes. It might be possible that my fundamental study and fundamental, it's not only about buying, researching and buying. The stocks which I present, they are maybe 10% stocks out of what I study. So maybe 90% stocks I discarded because they're still fundamentally I don't have a confidence. So then you have to do that fundamental study first. Does it fit in your criteria? So does it fit in your checklist? So then fundamentally, I have a 3-4 stage process. My first stage is, many of you know that I have a Excel template which covers some 70 KPIs. Again, in the valuation webinar, I showed you. So if my first criteria, if the stock doesn't satisfy, like in API, I get a lot of stocks which have very poor cash flow capacity. Like one stock, I highlighted, it may be good for trade, but fundamentally I will never enter. That's a API stock. I have highlighted the name. So it has to first qualify that basic filter criteria, which takes me 1 hour, 2 hour. Then the second criteria comes. If it qualifies that criteria, then I start reading annual reports. I go through last 3-4 years of annual report, 1-2 year of con call transcripts. And then, because first I have certain filter criteria at sector, so I don't study anything less than 500 crore market cap. And at any point of time, you won't have more than 100 stocks in that stage one of that technical analysis. From that, when I start filtering, running these Excels and seeing my first level filter, I'm left with 20, 30 kind of companies. Then I'm keeping my eyes on those companies. I start reading fundamentally about it. I go through annual reports, con call. Then that helps to build confidence. Then let's say we got some 6-7 companies. So my style is, initially I build very, very small positions, maybe 0.25%, 0.5%. And until unless technically something brilliant is happening on chart, or the first analysis itself is a aha moment, like what happened in Apollo Hospital, where I understood it's a pure play capex story, it's a pure play operating leverage play. Or what happened in Loris, where there was a totally business model change from API to formulation companies. So you track the company for 2-3 quarters, you get a sense of management. Like in Aegis, it didn't happen in 1 month. It took almost 6-7 months. And Aegis, actually, I took my first position at 230, but it did fell to 170. So also I told, for me, valuation is a band. So I'm not going to buy in one way. And in technical also, the charts don't get in the best structure on a single day. Slowly you will see the charts are aligning and your moving averages are contracting and your closing price, which is below all the moving average, then your golden crossover happens. I'm talking more again from long-term techno funda investing on a weekly chart kind of scenario. And then if you see the slowly all the bad things which are there, either if you have enough margin of safety, so there are two ways to it. If there is enough margin of safety in valuation and it's a sector which I understand well, I might discard the technicals and I can go and I can take a position and I can sit for 1 or 2 years. Like DFM Food was one such story where I just didn't care about the technicals, because I knew they're not doing well because of reason, and the investors who are there, they don't want to stick to a company which is not doing well and they don't know how long. But as an investor, I have a choice. Maybe for a fund manager, there is no choice. But as an investor, I have choice because I know this is something which the management is doing by choice rather than the market forcing them, because of the kind of shoot up in marketing expenses they did. So that is one approach where if I see there is enough margin of safety, I can discard the value technical charts only if I understand the industry well and I have that kind of conviction. There are industry, pharma, I will never do that. Banking, I may not ever do that. The second approach is you keep nibbling slowly, and two things will happen. Either your charts will break and it might turn out to be a fake stage one, and again a new low might get created, or slowly it will align at the market cycle and slowly the stock will start performing because there is enough margin of safety. Some big investor is also realizing the importance, and then your charts will align. Then you play it like a techno fund and then you keep accumulating. But basically, for long term bottom fishing investing, this is my process where I have a technical scanner. Also, I have a fundamental scanner. So when I talk about bottom fishing investing, so again, when I created the fundamental investing course, there were 2-3 examples I had taken that time, 6-8 months back. C8 was one example. RPG Life Sciences was another example. So if you see C8, the kind of assets they had almost the market cap was lesser than, much lesser than the asset plus the current work in progress, net fixed asset plus current work in progress. And then if you see the tire company auto cycle, 4 years, your auto numbers, because of COVID, your auto numbers went minus 10% from 3-4 year back number. So there was enough value there, but the momentum charts also were not that great, but even there enough value. Or if you look at Surya Roshni, which I have discussed again in some of my webinars, I mean, a simple DCF with the worst case margin of the lifetime, and still you are getting 50% discount to valuation, and then on the chart you are seeing some high volume candles getting created and the price changing. So I'm just giving you example of the theory which I spoke about. These are the recent live examples, but some of my fundamental scanner, technical scanner combined, and then I go through this analysis of level one analysis of fundamental, then level two analysis, then annual reports, and then if story is exciting, if charts are improving, I take a call, depending on whether I have enough confidence to take a pure funda position or I want to take increment my position as technically the charts improve. So I hope, Shekhar, this answers.
Perfectly. I think the key is to have a range when it comes to margin of safety instead of just sticking to one specific valuation point or price point, right? I think maybe that's one mistake that some of us, including me, have made in the past. Thank you, Saurabh.
Yeah. And Prince, I think Sajal sir is also there. So I think Sajal sir wanted to speak. So maybe if you want to check from him.
Hi, sir.
Yeah, hi guys. Hi Saurabh. Hi Prince. Hi everyone.
Happy New Year, sir.
No, I've joined as a speaker. I've literally just joined, so I don't know what the question was, but I'm more interested to listen to your views, Saurabh, rather than. So I'll definitely take an opportunity to jump in wherever is required. But you carry on great wisdom, and we don't get that many opportunities with you. So yeah, it's your the spotlight is definitely on yourself rather than myself. So yeah, but I'll definitely. I mean, I've got 3 4 good case studies to discuss, just to highlight the fact that where institutions have gone horribly wrong, and there's a general perception that ki retail बेवकूफ है और institutions is smart and because they've got all the resources. But I've got some data to prove otherwise. But yeah, I'll join it. Carry on, please.
Right.
Sure, sir.
So, Janak, you can go next.
Yeah, hi, Prince. Good evening, Prince. Good evening, Saurabh.
Hi, Janak.
Yeah,
Happy New Year.
Happy New Year, Saurabh. So I have two scenarios. So first, I'll go with scenario one. Okay, I needed your inputs basically on how one can look at handling such a situation. We are basically somewhere. Let us assume we are looking at less cyclical companies, or say more cyclical businesses, and good cash flows, steady management, good corporate governance, and everything. There is some visibility, and they are steadily growing as well. But somehow the stock price or the valuations never really catch up, and they move sideways for a humongous period of time. It can somewhere last even years. Okay, I really don't want to take the names, but I think the people, majority of the people in the forum will be able to guess couple of such businesses. How can one look at tackling such a scenario? कि यार cash flows और सब growth सब आ रहा है, but somehow it is not translating to your returns at a portfolio level.
So, if I understood correctly, your question is there are certain companies where the cash flows and all they are not up to the benchmark, but they do quite a good run up. And how do we handle these kind of scenarios? Have I understood it correctly?
Exactly inverse. There is profitability, there is cash flows, but the price does not catch up.
Okay, got it, got it, got it, got it. So see, there are two things. On one side, we say that market is always intelligent and there might be something which we are missing. But on the second side, we say only when we can identify such hidden opportunities, multi-baggers are created. So now both of statements cannot be 100% correct or 100% wrong. But what I understand is we should never discard it if we see there is something good in a company, because I have seen companies which didn't move for 2 3 years and then all of a sudden a big move came. And I believe it's a myth that only we say in the long term only fundamentals work, which is a right statement, but then we forget to define what is long term. And usually, many of us, if we look at the average holding period, many of us, our average holding periods are 2 year, and 3 year, and we think 1 year, 2 year is long term. My observations have been 2 year is not long term from a perspective where only fundamentals work. And I have lots and lots of examples where things beyond fundamentals also work. Think of a mutual fund or a PMS where there's a lot of redemption pressure, and they are selling for continuously. And in the small cap stocks, it's very difficult to sell in one go because in India there is not liquidity. I have seen 2000 crore market cap companies in times where on a daily 2 crore of trading, lower circuits have been created and upper circuits have been created. So many times, these kind of selling, they can go for months and months. And because that kind of selling is there, these are reasons beyond fundamental. We don't know why that guy is selling. And many times we say, oh, that institution is selling, then it's a bad company. They can sell because of multiple reasons. Maybe they have got a relatively better opportunity, and maybe in their basket, this is the worst opportunity they have found. Or maybe because they have a redemption pressure. Or maybe ITC is a great example where we kept talking about it. If you see the ITC data, 23% FIA came down to 8.9%. Why? Because ESG. Now it has nothing to do with fundamentals. And the problem is when price doesn't perform, we think fundamentals have gone wrong. Everybody knew in 2017 what is the cigarette business and what they're doing in FMCG. And the same thing was there in 2020. Nothing has changed. And now slowly, if you see, the first sign of price reversal came when the FII selling got over and the 9% FII stake has again started going up. And this was a company where DII kept trying to nibble it, but it's such a big company that's very difficult to nibble such a humongous supply from FII. So your float, your liquidity, your why institutions are selling, all these things also matter for 1-2 year. Long run, of course, only fundamentals matter, but that long run is 3-year, 4-year, 5-year kind of period. There could be 6-month, 1-year period when these things may not matter, and these kind of supply things matter. So to answer your question, if you are finding a company good just because price is not moving, is not the way to discard a stock, because I for sure know there are reasons beyond fundamentals why stocks don't move for years. There is another stock I'll tell you in 2008 to 2012, VST Tillers. That stock didn't move, and when prices don't move, then people tag it that it's a government stock because the revenues are totally dependent on government funds. But if you would have seen that kind of working capital cycle and all, based on whatever payment terms are, it was a decent company. So the question is, whether you want to rely on numbers or you want to rely on narrative which has formed because the prices are not moving. And of course, it needs a lot of conviction. And that is where I try to do all the separate analysis. I try to find who is selling, why he is selling, what is the reason for selling, what are the charts selling. All of this helps to get that external perspective beyond fundamentals, why it is not happening. If there is an issue there, then I know my reason. But if there is no issue there and still the stock is not moving, then I try to, of course, challenge my thesis that what am I missing? So many times if you see, so the other thing is what is our understanding of market and valuation and all of that. So if you see a lot of paper companies, they are very good cash flow companies, but the growth is missing and structurally that business is in decline. So somebody, if purely looked for growth, purely looked at a cash flows, and cash flow, it's a negative working capital business, all of that is fine, but market pays for the growth, and if the growth is moving, structurally the stock will not move. It might go 20%, 30% up and down, there separate. So we have to also understand what drives valuation. There could be stocks where they will always do well in bull market, the numbers are good, but the management has such a bad track record that most of the investors, they come to play for as a tactical play. They don't want to write the story structurally. So we have to look at all these things. What drives valuation? What is the reason why stock is moving, not moving? What are the reasons beyond standard fundamentals and valuation why the stock is not moving? Like many people talk about ultramarine, promoter bech raha hai. But you have to go and you have to bifurcate the person who is selling. Is he operating promoter? Is he a non-operating promoter? And if a non-operating promoter is selling, and there are stocks which are very low in market cap that will not even fit in large cap, mid cap, small cap. So many times mutual funds will not be interested to buy them. So basically they are investors like you and me who buy, and in individual capacity the big investors buy. So in small cap you will find a lot of these stories where maybe somebody who is from promoter family but non-operating, he wants to offload, and he will keep selling for 1 year, 1.5 year, stock will not move. And the moment that selling gets over, and then the stock has performed very well for 2-3 years, it has a track record history, all of a sudden re-rating happens. And when the re-rating happens, we said that okay, it was a mouth-watering valuation in the hindsight. So this is how I try to do it, but there could be many more reasons beyond our understanding and sometimes we just can't help it. But this is how I at least try to do this study and find it, and then take my calls rather than blindly ignoring it. But yes, technicals helps, and that is why I applied technicals also, because it's very difficult to hold for things beyond 2 3 years when prices don't move and other stocks they start doing well. It's a very difficult situation. So there are only 2 3 ways: either develop that kind of conviction and let history tell us that what was our success rate in holding those high conviction stocks, or the other way is look for alternate skills like technicals and all of that, and then enter at the right time to ensure that we don't get suffered by a major price correction or a major time correction. I hope I have answered, Jana.
Fairly, really helped start the thought process. So now, Saurabh, I wanted to have a second scenario over here, and thanks for the first one. Quite helped build the clarity. But now let me slightly invert the scenario where you study a company, you are studying it, you build some position. Okay, you say, for example, you get it at 100 rupees, just a random arbitrary number. And but due to some reasons, even the market discovers it, and say your vision or with the growth rate narratives, whatever the management that is giving, you see the company might be looking at say 200 250 next 3 4 5 years, or say 300. But that happens that the stock within say a matter of months moves to say 150. It is in a 50% upside. So what do you do in such a scenario? Do you take exits? Do you take partial profit? How do you look at handling this, assuming everything that is needed for a good investment is in place?
Yeah, so think it like a decision tree. So there are 2 3 things which will happen. First, money is limited. So, and second, your money, you have to deploy it somewhere. Now the question is, let's say I had a 5 year target of 100 rupee becoming 200 rupee, but in 1 year 100 rupee has become 150 rupee. Now the question is, has it happened on the same set of assumptions, or the assumptions have changed? If the assumptions have changed for good, then again I need to redo the exercise. So as I said, valuation is a dynamic concept. So if I revalue based on the latest change in information, and let's say the latest change of information says in 5 years from it should not be 200 rupee, it should become 400 rupee. So the idea is to look for the kind of return I'm looking in next 1 year or 2 year or 3 year or 5 based on whatever thesis I have made. The what percentage of return I have recovered in what percentage of time. So if I am expecting 100% return in 2 years, but I am getting 70% return in 2 months without change of assumption, I will not even think twice, and I will book some profit if I get any signs. Or and I am a for my selling, I leverage charts a lot, because it's very difficult for a retail to have the leading information. Mostly the leading information is there with the insiders, with the vendors, with the direct customers, and big guys. They create charts, we follow charts, and when the real information comes, lot of damage has happened. This is not valid for a 5 year 10 year kind of scenario, but then we need that kind of vision and visibility to understand the sector and the structure for 10 years. Unfortunately, I don't have that. My visibility lies for next 2 3 years, and that is how I play. And I have played stocks for 3 years, and I have exited stocks for 6 months also. The reason being, if 70 80% of my profit I am getting in hardly 20% of time, and my charts are telling that okay, it can go through 20 30% of correction, why shouldn't I exit? So I try to exit. But let's say if the assumptions have changed, and the new assumptions creates new valuation scenario, and then this price rise is still nothing great, then I will continue to hold. The third thing is, if I sell, what is the additional opportunity I have to deploy the money, and do I have a better opportunity to deploy the money? If I don't have a better opportunity to deploy the money, then and still I can feel that okay, some return will come which is higher than the FD, then why should I exit? So we have to look at the relative opportunity, we have to look at the change in assumption, and we have to look at against our expectation how much of that has been covered in how much of time. And many times I will never make a full exit, I will make a partial exit, because nobody knows what will happen. So it's like emotionally it gives you best of the both worlds ki agar usse bhi upar jata hai, because and sometimes what happens, assumptions are made by us. We think that okay, this is not a great number, but next quarter can surprise us. Like if you see Varun averages 4 years, it has every quarter it keeps on surprising on earnings. Who would have thought that? So I try to many times play with best of both world doing partial exit, but this is how I try to do, and it has worked for me so far.
Fair enough, Saurabh. Thank you for that clarity. मतलब आपके साथ we will have to set and I have some more follow-up questions to this specifically, but something that I'll like to take offline with you. But nonetheless, great, Saurabh. Thank you for providing some nuggets and insights into this. Thanks you.
Thanks.
Thank
Thanks.
you. Thank you, Janak. And Shashank, you can go next.
And sorry, just one more point I will add to Janak. It also depends on our own, investing portfolio. See, somebody who has a 20 crore kind of portfolio and he's invested in 500 crore market cap company, he cannot make these kind of frequent entries, exits. And when I say frequent, I'm not talking of trading. I'm talking about exiting after 1 year, 1.5 years. So he might be a long-term investor because his partial exit can also, make the stock fall 40-50%. So, even for an investor, the journey as an investor is also dynamic. So when we have a 20 lakh portfolio versus when we have a 5 crore portfolio and when we have a 20 crore and 50 crore portfolio, handling that small cap stock of, and because I deal many times with small cap stocks, 800,000, 1,500 crore market cap, I think even mentally I am prepared to change my style, how, my corpus is increasing and all of that. So the same answer could be different for somebody, even though he might know these things, still he could act in a different way. So we should be cognizant of all these things and we should be ready to adapt, changing as our, investing stature is changing over a period of time. That is another point I wanted to add, Janak.
Yeah, Saurabh, thank you.
Yeah, just one quick point here. So Saurabh mentioned a great point regarding this entry and exit and what's the size of the fund, etc. So many times people ask me why none of these pharma funds have performed, and there are some great fund managers managing those funds, and yet they haven't performed. So the reason is again linked to the liquidity. See, they have to own those large caps, and if the large caps haven't performed, which they haven't, right, in the 5, 5, 7, even 8 years, I think since 2015, and most of them have not performed. Maybe Cipla is an exception, maybe one or two more. So that's liquidity is one constraint for them, and the other thing is that they have to sell their winners. So to take a hypothetical scenario, if I'm a fund manager, if I bought, let's say, JB Pharma 3, 4 years back, and I had a starting position of, let's say, 6%. If the stock becomes 5, 6, 7 bagger and it gains disproportionate weightage in my portfolio, I have to exit because there are certain rules that I have to follow. So होगा क्या कि अपने आप winners बेचोगे और losers में और पैसा डालोगे और विंडो चल नहीं रहा है आप लेते जाओगे. So that's how you underperform. But that's the constraint they have, actually, and I've got full sympathy with people likes of Salesh Bhan, Nippon. I mean, brilliant people, but they've got this constraint to live with. So that's one of the point that I wanted to make. But yeah, carry on. Thank you.
Yeah. Thank you, Sajal sir, for that insight and nugget.
Shashank, you can, yeah.
Yeah, okay, yeah. First of all, yeah, thank you so much, Saurabh, for this wonderful session. Uh, is Saurabh there? I can't see him.
I think he just got dropped. Let me check with him. In the meantime, you can ask. Sir is there. So, Sajal sir, in the meantime, can we go with the case study you mentioned? I'll check with Saurabh. Okay, he's here
Yeah,
again.
I think he's here.
हाँ. So I've got several case studies actually. So because अभी pharma पे हैं, so I can take one from pharma. So I'll take one large cap where there's the myth that wherever the retail shareholding is increasing, there is something dodgy about that company, and where the institution shareholding is increasing and the retail shareholding is decreasing, the general perception is that the retail is wrong, and fund managers, because they've got all the resources. अभी retail का क्या है ना, see, अपन तो खाट पे बैठ के एक लाठी लेके वो आसमान में मौसम देखने वाले लोग होते हैं, because we haven't got those resources that the institutions have. So they are like the NASAs of the world. They've got all the data points, they've got all the connects with the management. So the kind of leverage that they have to analyze a business is significantly better than any retail investor, and that's a fact. But here is a case study where institutions have been adding this pharma company and retail has been selling, and yet the price hasn't performed. और ये डेटा मैं आपको दे रहा हूँ 2019 से. सो 2019 में DIIs की होल्डिंग 13%, रिटेल वाज आल्सो 13%, 13.5%. देन सितंबर 2021 DII is 15.5%. So 13 से बढ़ के 15 पहुंच गए. And retail is down from 13.5 to 11. So retail sold between December 2019 and September 2021. The stock didn't perform. Today, fast forward to September 2022, एक साल और बीत गया, right? Institutions have added more. So currently their shareholding has gone up further, and retail is now just 10%. And still this stock hasn't performed. So who is smart here, retail or institutions? So, and I tweeted about this few weeks back actually. So this is Aurobindo Pharma. You can go and check the shareholding pattern of Aurobindo Pharma. Now imagine कि हम तो खाट पे बैठे हुए हैं लाठी लेके versus the NASA example in terms of the resources. So that's a myth, guys. I mean, institutions make a lot of horrible mistakes, and this is just one. And I'll definitely have some more as we go along.
Right, sir. So, Shashank,
Yeah. So first of all, thank you so much, Saurabh, for this interesting session. I have a question regarding when we sell these companies, which are like, let's say, we find fundamentally they are overvalued and all. So what proportion of like your attention goes to technicals when selling, and what proportion of attention you give to fundamentals? Because generally, price has the tendency to dictate the top before the numbers would tell. Because this kind of a situation becomes very tricky, because let's say we have a business and you have, let's say, a ballpark range of operating margins, and let's say we are in the middle of that range, and fundamentally we would think that the company should perform towards at least towards the top range of margins, but suddenly something happens and the price starts to come down. So how do you deal with these kind of situations?
Yeah, it's not easy. See, when the cycle plays to perfection in terms of the extreme ranges, that is where the best decision happens. But many times you will not see all that same extreme getting executed, and that is where it's tricky. But it's, for me, decisions are never binary. It's never about I will enter fully or I'll exit fully. There is always the option to sell partial, right? And it all depends how far you are going, from your valuation band. If I can take again Newland example, uh, again, this is a video I have made for Newland when Newland was recently 6-7 months back trading around 1100. Now again, I have a very limited understanding of this business based on what I have learned out of annual report, con call transcripts, and all. But having tracked for 5-6 years, my observations were it's a very non-linear business. It's a business where promoters also don't know what will happen next 1 year, and the margin ranges were there. If you again normalize the margin, not taking that specific quarter or a TTM margin, you normalize based on history. And when the prices were around 2700, based on my normalized valuation of, I don't recollect exactly which metric I took, but I took the EBITDA number, cash flow numbers, and I came up with that. It was around 33x. And when it hit the current number of lowest around 1000, this was around 12x. I actually exited around 2200, and I will tell you why. I exited because first at 27, 2800, the valuation froth was there. But because everybody was making money, I was also happy there. But if you see the Newland chart, there was a significant and quick fall, I think, to 2200. And I have my own rules that, if these kind of rules get triggered, like if the valuation is beyond my comfort and post a great run up, stock is going below the 40-week moving average, even as a long term investor, I will make an exit. So, like, this is one example where I made a full exit, but there could be scenarios where, the valuations may not be at such an extreme. And what to do? Like right now, if I take another company which is in steel, because we have been discussing about steel, Math and Alloys. So Math and Alloys I did exit again at 1,100 rupee, and this was the exit I did before Mathan met its peak price of 1,500, and I missed that bus, but I don't regret it because see, my expected return was something maybe 15-20%, and if that has been achieved, I'm still okay. I mean, I missed that last leg of momentum, and after that, it's corrected. It has gone down, but I am okay because whatever I played, whatever thesis, whatever return I played for, I have got that. My bigger, my bigger dilemma has been post the correction. Mathan went through 50% correction, but it still didn't hit that kind of fundamental attractiveness valuation band which I was waiting for. And I didn't build my position. And again, it has gone back from 750 rupees to 1000 rupees. So I think there will be always things which we'll miss, but it is more around what we are holding and what is our expectation from that holding, and are we able to do that or not, and in our process what we are doing, have we done right or not, and then after that how can we improvise the process. But till this thing is there in picture and I have not done a mistake there, I'm okay to let go these things rather than trying to time everything to perfection. But these are some of the
Right.
examples, and that is how I do it.
So if I understand correctly, your first priority has to be on the fundamental side, and then you see with the technical part. So, for example, like with math and alloys, you were waiting for your price band to come, but the technicals reversed. So you would
No, but
prefer
in
giving the
Newland,
weightage to.
in Newland, when the charts worsened, I didn't care much about what will come in the for future quarter earnings. So I give lot of importance to charts also, and depending on how bad are the charts, that is important. So it's never like I will give this importance over that. How bad are the charts? That is important. How much grip I have over that sector. So if in a financial bank or lending business, if the charts are really bad, I don't care about fundamentals, because the kind of internal things happen, even a CEO doesn't know what kind of frauds can come in the bank. So depending on the intensity of the depending on the how bad the chart is, how what kind of big selling, if it's a super high volume sell off with very wicked kind of candlestick pattern, I won't bother about fundamental. I may sell off. But when I understand, I know the fundamental, I have the sense the chart is also in a slow distribution kind of phase where you never know if it's a distribution or it's just a temporary 6 month break, and again it can go up, and there if the valuations are still reasonable, I might sell only 25%. So it's never a 0 or 1, it's depending on which is more stronger and what is my understanding and what is my strength of that sector or that company understanding.
Right. Yeah. Perfect. Thank you so much, Saurabh.
Thanks, Shashank.
So next is Anupam. Anupam, you can quickly unmute and ask your question.
Yeah, hi sir.
And
Yeah, my
just
question.
sorry, I just want to add one more example to Shashank as a my mistake. So Tata Elxsi was one stock where I exited very early. I felt the fundamentals are, the valuations are too stretched, but to my surprise, they kept showing extremely good numbers, which I never expected. And I didn't even wait for a chart that 13-week, 20-week. I just felt that it's too overvalued. And somewhere I didn't follow the technical process. I felt that, okay, I know the fundamental, it can't go more higher than this, but it went, and that was a mistake I did. I couldn't ride had I followed the technical rules. So it's never about, so that is why I never say that you should look only at fundamental, you should look only at technical. A good approach is always blending, and still there will be few mistakes, but we have to live with it. I mean, पैसा बन रहा है, मैं तो उसी में खुश हूँ कि FD return से ऊपर बन रहा है, if I am getting that 15%. But this is one mistake I want to share, that totally discarding technical and feeling that I know all the fundamental in future quarter. I did that, but I was proven wrong. So this is how sometimes I have gone wrong. Yeah, please go
It's a
ahead
it's
now.
a it's a very good point, Saurabh. Just one point I want to add over here. How do you think about re-entering a particular stock, which you would have, let's say, sold? Has it like happened with you that you have re-entered and made really good returns?
So as an investor, most of my exits when I have exited, I haven't re-entered within 5-6 months, because the experience says most of the times when some stock goes through a very good phase and good gives very good return, first you have a downtrend cycle, then you have a consolidation cycle. So typically those cycles, whatever sectors you pick of, whatever cyclicity, those cycles last for at least 1 to 2 years, and then only you get your next cycle. Even if you take a logical business, even if you take a capex, like right now you see the whole MDF industry. So I have tracked plywood industry for last 6 years, and I have experience of plywood industry that when it goes through one good phase, and in that good phase many companies come with kind of humongous capex, and that capex takes almost 6 months, 1 year to create, and then because there is a oversupply, your margins correct, and then only slowly a 2-3 year period of time comes when the supply has been normalized with demand, again margins come back to normal. So whatever business you take, based on my experience, if the stock has done really well and then I have exited at decent top, it's rare that within 1 year the stock will become so attractive. So like other stock where I have done it for the second time, I'll tell you one stock where I've taken a position, but I am not expecting anything for next 1 year. This is Wabha Global. So 70% correction has happened. And the first cycle I didn't make a lot of money. It was a very small entry and exit. But I'm still waiting. I don't have expectation, but I can see some kind of stage one consolidation going, and I want to track that position. So I have taken a position. So yes, I do re-enter, but those re-entries are also just to track the companies. Else, beyond 2 years, within 2 years, I have hardly seen entering, in the same stock after making good money. Newland I have done. Newland is one company you can say. So Newland I played that 2020 cycle, but it was such a quick 70% fall. And then, as I said, if valuations become so attractive, and having tracked it for 6-7 years, some kind of confidence I had that this is not a bad management. It is a typical business cycle. So Newland is perhaps one example where I have done, but I couldn't build a full big position the way the stock moved. And in pharma, if I don't have my margin of safety right now, I will not place that as an investment. So my first investment tranche, which I did, it still remained same and it went through quick move. But these are some of the examples where I might have done.
Perfect. Thank you so much, sir.
Thanks.
So Anupam, you can quickly unmute and ask your question.
Yeah, so there are a lot of fraud that happened in IT, in chemical sector in this within a year or so, and there are some stories that are getting built, like hotels are getting built. So when is there like, or if I would say, there is like this PSU is being getting big. So what are the fraud that you are seeing currently right now in this market?
So see, when you talk of PSU, are you talking about all the PSU companies, or are you talking about PSU banks, or like what do you mean by
PSU
PSU?
bank specialists, PSU bank specialists.
So see, first when it comes to hotel, this is a sector which cannot be an investment bet for me. I mean, I have my own set of rules in terms of the business quality, the cash flow quality, the balance sheet quality. The only hotel stock I have ever invested, I'm using the word invested because I take positions, but I have a very clearly segregated positions that this is my investment position, this is my trading position. Sinclair Hotel has been the only company where I have ever invested in hotel, typical hotel. So for me, it will always remain a trade. So that is why though I understand the industry, I never invest. Coming to PSU banks, if you look at the banking cycle, uh, in last 25 years, there were 3 times when the banking credit growth rate hit 6 to 8% kind of number. And then it just reversed, and then it has grown at around 15-16%. And typically where your credit growth rate of bank is 1.5 times of your GDP growth rate. So if you look at the data, this is what happened in 2020. And actually I've been bullish on banks. I have met tweets. So banking as a cycle hit its all-time low, which was the third all-time low, and last 4 years banks have not performed. So again, if you see the whole reversion to mean concept, basically the cycle had to turn, and there were triggers because your growth rate was normal. The other things which were happening is the cleaning exercise of banks were going on from a long time. So all of that helped to build a conviction. But your question currently, Still, if I look at bank, I will tell you a very generalized way of looking at it. Just look at the price to book value of the whole banking sector. I believe still it is much lower than its historic mean. And this is a sector where I still expect the NPAs to keep performing well, more collections to happen, and the credit cycle to continue growing. So it's not like banking cycle will start and will end in 1 year. Price wise, you will see a price momentum going, then consolidating for 3-4 months. It will not perform, and then it will look like okay, ये sector तो out हो गया. And that is where the importance of fundamental investing comes into picture. So as a trader, you will feel that okay, ho gaya kahani khatam. But as a fundamental investor, based on study, you have that conviction that the cycle doesn't ends just in 6 months. Still, your expectation of credit growth rate is good. Still, you are looking at more collection, and still your valuation, whether you use any kind of metric, still your valuations still say there is no fraud. So I am telling, still I am finding the valuation attractive. In fact, in the recent correction, when the bank index corrected, 420 was a very important psychological resistance level, and from 450 it came to 425. I did add because fundamentally I am finding value based on even simple metric, based on company analysis, sector valuation analysis. Technically, I am finding a good risk reward zone around 420 because after 4 years, that levels got crossed. And I see no froth because when the froth has to come, it has to go 20-30% above the mean value. And still, when I'm reading the con calls, I mean, everything I'm looking at, things will improve. So these are the reasons I feel the cycle will be there. But and even for PSU banks, it is valid. But what we need to take care is there is a tweet I made. Many PSU banks, when you see the promoter holding, which is government of India, they hold 90 to 93%, and the 75% rule doesn't apply to them. So actually, in many PSU banks, you have 98% kind of shares which are cornered. So when you see this kind of situation now, when it goes through a uprun, the uprun could also be humongous, which has happened. But when price corrects, it could be a big carnage, and you may not get chance to exit also. So we have to be cautious of this thing. And still, valuation wise, I find it attractive, but fundamentally, many PSU banks, except one or two, it doesn't qualify. In fact, in banking, as a pure investor, I never treat anything beyond CUB, HDFC, and Kotak as investable. That is how I am. I will still call my bank trades as trade, except these three companies and Bank Nifty, which is primarily constituted of these companies which are there. So still, I have 50% position in Bank Nifty, and rest 50% I hold in some of these companies and some of the trades. And luckily, the trades have done well. Like Karur Vyas has done really well. Though I have done a fundamental analysis, still for me it remains a techno funda bet. So that is where we are. I still believe there is at least 5 to 10% attractiveness to valuation based on whatever valuation. I did this exercise just 15-20 days back when I had to build that additional position, and I still feel this cycle will last for 1 to 2 years at least, based on the historical banking cycles which have played out. I hope that answers.
Yeah, that answers, sir. Actually, I was actually quite sitting on a gain from a very low entry points. I was thinking, should I? I actually booked some partially. I was thinking, should I exit or not? That was one thing. And
So
one other thing
I
that I
did book my PSU bank. I did book because another question I think somebody asked that when you expect 100% and you get 80% of that in 2 months, that actually happened in PSU, and that was the sheer reason which I said if that happens I'll book, and that is why I booked. But my private bank portfolio and my Bank Nifty portfolio I have not reduced. In fact, I have added.
Right,
Yeah,
right.
yeah, right, sir. And the other thing that is one of the things that I deeply find right now that the story can play out is NBFCs that are especially post IFRS crisis that have like a book value of 9.5 or 0.44x. Do you have any views about that? A lot of
So
corporate debt that.
So see, when any sector goes through a lot of cleaning and the valuations are attractive, the chances to lose money becomes minimal. And that is where you see even people make 10x money even in sugar. So of course, if you enter at the right price and right valuation, you make good money. And still NBFCs have not participated with that kind of strength. I tracked 2-3 NBFCs. Like JM Financial is one NBFC where I'm tracking it closely. So still they have not participated. But I have my learnings of 2017. If you'll go through the con calls of Edelweiss and all, see, at the end, it's a passing the parcel game. When all this real estate funding started, the private banks, most of the banks, they stopped lending in 2014-15. And then because nobody was lending to them, NBFCs came, and in 2015 to 17, they showed huge growth rate driven by these real estate investments and all. And there also I mean the housing finance companies, I can't talk about the kind of schemes came, and the builders and the housing finance companies, they colluded. Double your money kind of schemes were floated. So there are a lot of bad lending which happened, where still the NPAs were kept low, because lending is the nature of industry where the reality will come out after 2 3 years. So you'll think it's a great company with least NPA, 30% growth rate. It doesn't happen that way. High growth rate in lending means there is some risk, and we have to be cautious. Bajaj Finance could be only one with such a long trajectory. So still, I might play NBFCs more as a trade tactically. I'm doing, or I might pick one or two companies, but I will always be cognizant of the kind of worst things which can happen to NBFCs, based on the history. So that is how I would look at it. I would still play it as a trade, because, as I said, in banking, I have burnt my hands. I have some bad experiences, and I respect quality a lot. And if I am going beyond quality, I will go with my stop losses, and that is how I will try to do. Or I will look at extreme margin of safety in valuation, and still I will for sure exit, when the cycle is peaking out.
Right, so great. So Sajal sir, we discuss your case studies, and then if we have another questions, we take after that.
Yeah, sure. So maybe I can I'll do a couple. So lot of questions I get on a daily basis, almost daily basis, on this Piramal Pharma, because I have tweeted about it before, and I've also covered it in my recent अक्टूबर सेशन एज वेल. सो एंड भाव टूट रहा है, तो भाव टूट रहा है, लोगों को लगता है कि वैल्यू है, तो अभी जो है वो क्या व्यू है, so that perception is also there. So there are, it's a mixed bag. I'll be honest, it's a great business. There are many positives about this business, but there is a definite red flag as well, which is a negative. And I think usually when you see the case studies, people अच्छा अच्छा सब पहले बोलेंगे, narrative number, and then at the end of the day there will be a slide on what are the risk factors, etc. I would rather do it in the reverse order. So I'll start with the red flag as I see it, because it's a recent development. It's something that has happened after the demerger was made and the both businesses got listed. So I'll tell you, there is a bit of history in this business that everyone should be aware of. So when Carlyle entered, they bought a stake from the management about a couple of years back. I think 2020 sometime हुआ था. The management came on media. So YouTube पे वो videos हैं. आप अभी देखोगे तो मिल जाएंगे, बाद में शायद डिलीट भी हो जाए. So if you want to go through them, do that today if possible. So management confirmed after the Carlyle deal that the debt reduction hoga. And when we saw the demerger, the way they played it, they saddled the pharma business with a lot of debt from financial services. तो जो साहूकारी का धंधा है ना, उससे नोट उठा के कर्जे वाले वो फार्मा बिजनेस में डाल दिए. And that's unethical in my view, and that goes against what they promised when Carlyle entered the business 2 years back. And to me, if a management like Piramal is not walking the talk, अभी किस पे भरोसा करें? I mean, if they tomorrow say something in the annual report, and if they tomorrow say something in the earnings call, I mean, trust नहीं कर पाओगे ना, because they haven't walked the talk in the past. तो अभी 4500 करोड़ के आसपास का डेट है, एंड दैट्स अ सिग्निफिकेंट डेट. If you look at the cash generated from operations, right, in that context, that's a significant debt. And ever since the stock was listed, there was a forced selling. So there is always, in these scenarios, there will be a forced seller, because the market cap has suddenly plummeted from 40,000 the consolidated basis to 20,000. So if your fund restrictions are such that you can only own large caps in that fund, you have to exit. तुम भाव नहीं देखोगे, तुमको बेचना ही पड़ेगा. So that's one. The other thing is that, if you are not tracking pharmaceutical, you have never tracked pharmaceutical, and it's a sector dedicated fund, or it's a fund where you don't own or don't want to own pharma business. So that's another scenario where the forced seller will emerge and you have to sell it. कोई ऑप्शन नहीं है, तुम भाव नहीं देखोगे, तुम 100 रुपए पे बेचोगे. Correct. So that forced selling happened, but I think there is also this lack of faith and lack of trust in management to deliver against their promises. That is also a key contributor to this selling, and that selling may continue. So even sell on rise भी होगा, because many people will believe that हाँ यार, ये हम फंस गए हैं यहाँ पे और हमको ये नहीं लेना चाहिए था, because we can't trust the management here, and वो sell on rise भी होगा. So that is a clear sort of red flag that I would like to highlight. Uh, I still maintain that in a steady state, and I this is not something new. I've tweeted this before, as well, before the demerger, that in my view the fair value of this business is so that fair value is subject to certain conditions. Conditions is that business mean reverts. What do I mean by mean revert? The CDMO margins, जो 2 साल पहले के margins थे, they were in the vicinity of 25% EBITDA margins. So when I say mean revert, I'm talking about EBITDA margins at the CDMO side getting closer to 25%, where they have been historically. And this business is a asset heavy business, so capex heavy and opex heavy, because majority of their CDMO assets are overseas. तो capex heavy होगा, opex heavy होगा, so asset turns will not be like what you would find with the Indian players. So you cannot give a 10 times price to sales multiple to their CDMO business for that reason alone, right? Plus the fact that majority of their CDMO business is not CDMO, it's just CMO, contract manufacturing of generic molecules. It's a very small portion, about 10% of innovator synthesis. So 4,000 crore ka, if you look at the Piramal Enterprises annual report fiscal 22, 4,000 crore ka total CDMO business hai, and $56 million out of that, which is about 450 crores, is genuine CDMO, which is the innovator synthesis. Everything else is a CMO, pure generic manufacturing hai, wo, contract manufacturing. So so that's second reason why I cannot give it a 10 times price to sales multiple. But 5 का तो दूंगा, ठीक है ना, बट स्टेडी स्टेट में दूंगा जब 25% EBITDA मार्जिन होगा. तो ये CDMO ही 25,000 करोड़ का बन गया स्टेडी स्टेट में. वो मार्जिन कब आएंगे, वो मैनेजमेंट कब डिलीवर करेगा, वो मैं तो सीईओ नहीं हूँ, मुझे नहीं पता. बट वो कॉल पे आके कुछ प्रॉमिस किया है, कुछ टाइमलाइन. आई मीन, कैन वी ट्रस्ट दैट टाइमलाइन? बिकॉज पहले भी बहुत सारी प्रॉमिसेस करी थी, वो फुलफिल नहीं करी, राइट? अभी इंस्टीट्यूशंस ये सब इनसे पूछ नहीं सकते हैं, कॉल पे तो कम से कम नहीं पूछ सकते हैं, बिकॉज उनको तो रिलेशनशिप रखनी है. अगर किसी इंस्टीट्यूशन ने आके कॉल पे ये सब क्वेश्चंस पूछना शुरू कर दिए, तो उसको तो मैनेजमेंट एक्सेस नहीं मिलेगी आगे से. सो दे वोंट डू इट. सो दैट्स देयर कंस्ट्रेंट, वो मजबूरी है उनकी. So that's one part. And then 40,000 crore का मैंने फेयर वैल्यू बोला था on the basis that balance sheet will be at least debt free if not net cash. अभी आप डिवीज की और सिंजीन की बैलेंस शीट देखो, वो नेट कैश है उनके पास. वो धंधे ही अलग हैं. तो यू कैनॉट, लोग मेरे को कहते हैं पिरामल का वैल्यूएशन यहाँ पे, डिवीज और सिंजीन का वहां पे. तो आप धंधे की बैलेंस शीट भी तो देखो. Plus the fact that ये इनका asset capex opex heavy है, because majority of the assets are overseas for whatever reasons that I just explained, right? तो मैंने वही कंडीशन पे बोला था कि 40,000 करोड़ के आसपास का एंटरप्राइज वैल्यू इसका होना चाहिए, एज्यूमिंग कि भाई ये जीरो डेट तो होगा कम से कम, अगर डेट फ्री नहीं होगा। अभी तो तुमने बिजनेस को जो है डेट से बिल्कुल लाद दिया है, वो मरा जा रहा है डेट के बोझ से, क्योंकि एक तो तुम्हारा एबिटा मीन रिवर्ट नहीं हुआ, अभी लो एबिटा पे चल रहा है, लॉट ऑफ कैपेक्स इज गोइंग ऑन, कैपेसिटीज इनकी, प्लस वो स्टाफ एट्रिशन भी हुआ है रिसेंटली, सो दे हैव बीन स्ट्रगलिंग ऑन सेवरल फ्रंट्स। सो एबिटा मीन रिवर्जन होगा, कब होगा किसी को नहीं पता, 2 साल लगेंगे, 5 साल लगेंगे, वो नहीं पता। तो इफ इट मीन रिवर्ट्स एंड ऑल, फेयर वैल्यू इस तरीके का धंधा आप खुद ही देख लो ना। सीडीएमओ को अगर मैं 5 का मल्टीपल दे रहा हूँ तो 25,000 करोड़ वो हो गया, प्लस इनका कॉम्प्लेक्स हॉस्पिटल जेनेरिक्स इज उसका 10 साल का CAGR 17% है। तो आप लगा लो कि वो 2,500 करोड़ का, 3,000 करोड़ का बिजनेस बनेगा अगले 1-2 साल में। अभी 2,000 करोड़ का तो वो था फिजिकल 22 में, and it has been growing at around 17% CAGR. So you do the math, and even if you give and it's a very good business. See, they are into this intrathecal and आपका pain management, complex hospital generics in the sense of ये anesthesia वाला business. So business is fundamentally great. There's absolutely no doubt about it, and they've got a large customer base, approximately 6,000 odd customers हैं इनके, मेनली हॉस्पिटल्स, राइट। सो कस्टमर के साइड में कंसंट्रेशन नहीं है, जो टिपिकल जेनेरिक कंपनी होती है उसमें बायर साइड कंसंट्रेशन दिखता है हमें, इसलिए उन पे प्राइसिंग प्रेशर ज्यादा रहता है। इट्स डिफिकल्ट टू एंटर अ कॉम्प्लेक्स हॉस्पिटल जेनेरिक्स बिजनेस, सो दैट्स अ क्लियर मोड दैट दे हैव, और इसीलिए ग्रोथ सस्टेन कर पा रहे हैं 17% की। तो इसको अगर मैं 3 का भी मल्टीपल देता हूं तो मुझे 8,000 करोड़ यहाँ से मिल गया। सो CDMO प्लस कॉम्प्लेक्स हॉस्पिटल जेनेरिक्स पुट टुगेदर इज 33,000, ठीक है ना। एंड आई एम नॉट गिविंग अ वो वाला वैल्यूएशन जो क्लीन साइंस और ये एथर और दुनिया भर के आपने टेक्नोलॉजी कंपनीज नाइका और लाइका और पता नहीं क्या क्या किसको क्या क्या दिया है प्राइस टू सेल्स। तो I'm not talking about those absurd obscene valuations. I'm giving a very conservative reasonable price to sales to these two. So 33,000 32,000 crore तो यही बन गया, plus they have got this OTC business which is growing at a very high pace. I think FY22 में 48% की growth हुई थी organic inorganic put together. So that's an unseen growth. कौन सा ऐसा OTC का धंधा है जो 48% ग्रो कर रहा है? ठीक है, उसमें इनऑर्गेनिक भी है, I agree that, but they are definitely growing way above the market. So again, you see the kind of valuations that market is giving to companies like Zomato. On listing day, Zomato was 57 times sales. Then फिर institutions वहां पे भी आ गए, मतलब उनकी भूख वहां भी शांत नहीं हुई। QI क्वालिफाइड इंस्टीट्यूशंस ने इतना हेविली ओवर सब्सक्राइब्ड हुआ था जोमेटो का। आई स्टिल रिमेंबर QIB वाज 52 टाइम्स ओवर सब्सक्राइब्ड इन द IPO एंड HNIs वर 33 टाइम्स ओवर सब्सक्राइब्ड। ₹125 पे लिस्ट होता है, ठीक है ना, 57 times price to sales पे Zomato, and then peak valuation was what 75 times price to sales, वहां पे पीक करता है। ये सब इंस्टीट्यूशंस, these are all large volume trades, you see, पूरा देख रहा हूं मैं, क्योंकि मेरा IPO में खास इंटरेस्ट है, क्योंकि मुझे लेना नहीं होता है मेरा मैं कभी नहीं लेता हूँ IPO, बट आई ऑल्सो ट्रैक व्हाट इंस्टीट्यूशंस आर डूइंग, एंड देयर वाज मैडनेस, कंप्लीट मैडनेस। अभी ना जोमेटो के पास कैश फ्लो है ही नहीं, नेट ऑपरेटिंग कैश फ्लो कभी नहीं बनाया पॉजिटिव, ठीक है ना। P&L पे अकाउंटिंग तो चलो वो तो नेगेटिव है, कोई बात नहीं, बट कम से कम डिप्रिसिएशन और बाकी चीजें ऐड करके तुम्हारा ऑपरेटिंग कैश तो पॉजिटिव होना चाहिए, वो भी नहीं है। ऊपर से तुम्हारे पास फंड्स तो हैं, वो हेलीकॉप्टर मनी है, वो खत्म हो रहा है, तुम्हारा कोर ऑपरेशन से तुमको पैसा बन नहीं रहा है, तुम इक्विटी डाइल्यूट करते जा रहे हो, क्योंकि वही एक ऑप्शन बचा तुम्हारे पास डेट लेने का। सी, या तो डेट कैसे लोगे, इक्विटी डाइल्यूट करोगे, बाजार से कर्जा उठाओगे, बैंक कोई देगा नहीं तुमको, क्योंकि तुम्हारे पास ऑपरेटिंग कैश ही नहीं है, तुमको कोई बैंक कर्जा नहीं देगा जोमेटो को, क्योंकि रीपेमेंट कैपेबिलिटी नहीं है, करेक्ट। तो इक्विटी डाइल्यूशन इज द ओनली गेस, तो एग्जिस्टिंग शेयर होल्डर्स विल कीप ऑन डाइल्यूटिंग, विल कीप गेटिंग डाइल्यूटेड। तो ऊपर से तुम जो है इस वैल्यूएशंस पे ओवर सब्सक्राइब करा आईपीओ, उसके बाद तुम मतलब लिस्टिंग पे तुमने छीछा लेदर कर दी। तो अभी अभी क्या फेयर वैल्यू जोमेटो की मुझे नहीं पता, सो आई एम नॉट इन्वेस्टेड, बट आई एम जस्ट यूजिंग दिस एज एन एग्जांपल बिकॉज आई गिव प्राइस टू सर्टेन प्राइस टू सेल्स मल्टीपल टू पिरामल फार्मा का वो कॉम्प्लेक्स हॉस्पिटल जेनेरिक्स एंड आपका ये CDMO business, and then OTC में आप hyper growth business है, so put together you have to use SOTP because they are distinct businesses, and even within CDMO there is so much disparity. There is innovator synthesis, there is complex आपका ये वाला generic धंधा है, प्लस उसमें थोड़ा बायो वाला भी इनका एंगल है, प्लस वो पेप्टाइड वाला एक्विजिशन जो हेमो किया था। सो CDMO के अंदर ही 4-5 धंधे हैं which are quite distinct, I would say. But again, if I give a very conservative 5 ka multiple and put together a sum of the parts, so OTC plus complex hospital plus CDMO put together gives me an enterprise value, a reasonable enterprise value of 40,000. Correct? So valuation kahin bhi nahi hai aaspas. Excellent comfort that we have on the valuations, but I've got no comfort on the management because they haven't walked the talk in the past. So that's my case study, and then just continuing because I've spoken about Zomato, I'll just cover few more. When Clean Science as an example, again 34 times price to sales पे list हुआ, वहां पे भी institutions की भूख शांत नहीं हुई, and they took it to 50, almost 54 times price to sales. Gland Pharma, another example. I mean, it got listed at 14 times price to sales, and institutions kept buying it all the way to 19 times price to sales, and all the fund managers have been positive. I mean, if you go to any con call, I mean, Nitya Balasubramaniam, I've got great respect for that lady, right, from Bernstein. And she has been positive all along, and she is still positive, by the way. But I mean, at what valuation? You are buying a business of Gland Pharma. You said that it's CDMO. ये काय का वो जेनेरिक करते हैं, इंजेक्टेबल ही तो कर रहे हैं, एंड सो इट्स अ जेनेरिक. लुक एट द ग्रॉस मार्जिन, 50-55% का ग्रॉस मार्जिन है. इनोवेटर सीडीएमओ में 75% होता है ग्रॉस मार्जिन, नॉट 50%. तो वो बिजनेस 19 टाइम्स प्राइस टू सेल्स कैसे डिजर्व करता था, 14 टाइम भी कैसे डिजर्व करता, 10 भी कैसे डिजर्व करता है. इट्स लाइक मोर और लेस सीएमओ बिजनेस. थोड़ा सा इंजेक्टेबल्स में अभी डिमांड सप्लाई पे वो अच्छा फेवरेबल सिनेरियो आ गया, तो आपने उसको चढ़ा दिया. फिर देवर इंस्टीट्यूशंस दैट वर कंपेयरिंग ग्लैंड फार्मा विद औरोबिंदो, और रादर औरोबिंदो विद ग्लैंड फार्मा, सेइंग कि गिवन द वैल्यूएशंस ऑफ ग्लैंड फार्मा, औरोबिंदो बहुत सस्ता है क्योंकि औरोबिंदो के पास भी इंजेक्टेबल कैपेसिटी है, कंप्लीटली इग्नोरिंग द मैनेजमेंट एंड द गवर्नेंस ऑफ द औरोबिंदो. तो वहां पे वही जो हुआ ना, रिटेल बेचता चला गया, इंस्टीट्यूशन खरीदते चले गए, वो ये वाला थीसिस प्ले आउट हो रहा था कि ग्लैंड भागा जा रहा है तो अब औरोबिंदो ले लेते हैं. सो अगेन, ये कभी मत एज्यूम करो कि कोई इंस्टीट्यूशन कहीं घुस गया या कोई एचएनआई कहीं घुस गया है तो हम भी घुस लेते हैं. क्लियर एग्जांपल्स, all the recent listings from Nykaa to every, I mean, Nykaa तो कुछ horrible evaluation था. I think it got listed about what 21 times sales, 45 times sales rather. So Nykaa was 45 times sales listing. It went all the way to 47 times sales, price to sales. And ये सारा का सारा institutions that they used to come even on various channels. BQ पे भी बोला है, E2 Now पे भी बोला है, कई सारे फंड मैनेजर्स ने, अब नाम नहीं लूंगा, but they've been very positive all the way. तो अभी कौन सी विजडम है अपने को समझ में नहीं आता. So those were some of the points that I wanted to highlight, and I'm more than happy to take any questions if there are. Thank you.
Right, sir. So Ravi, you have a question. Yeah, yeah, Kumar.
Prince, one added point on Piramal, because Sajal sir were discussing about the trust issues. So I tracked Piramal more when it was Piramal Enterprises and more spoken as fundamental, finance business. So they have shown mixed colors. If you see 2012-13, they distributed whatever cash they got to the shareholders, which are good. But in 2017, when this whole NBFC cycle was at its peak, and Piramal was one of the highest growing company and used to show very less NPA, there was always a question of what when cycle will go wrong. And they always had this, counterpoint that, look, we have a business called Piramal Realty, so we know how real estate works. And even if some of these projects will go bad, we know how to take over these projects, and we know how to execute these projects, and we know how to sell these projects without creating NPAs. And we know what has happened after 2017. Now, whether that statement was made by that operating CEO of that time, and whether it was he who created all this picture and Mr. Piramal didn't know, I don't want to comment on it. But I just want to highlight that we should not take whatever managements are telling on the face value, because even historically they made some kind of statements and they couldn't live by it.
Right, right. So Ravi, you have a question here.
Yeah, Sajalji, greetings. Actually, I have one doubt. You were saying that they communicated about deleveraging in 2020, and I guess back then it was a merge entity, enterprise और pharma दोनों साथ में थे. So whatever money they get, if कहीं पे भी डालें, enterprise में डालें या pharma में डालें, it was irrelevant for the shareholder point of view. एंड जो डीमर्जर था वो मिरर लिस्टिंग है जितना आई डोंट नो बिकॉज आई डोंट ट्रैक फार्मा और केमिकल सेक्टर आई डोंट अंडरस्टैंड बट आई ट्रैक पिरामल एंटरप्राइज इजंट दैट द मिरर लिस्टिंग वाज द केस सो उसके बाद फॉर अ जॉइंट शेयर होल्डर इट डजंट मैटर कि डेट कहाँ पे डाला है कंपनी ने
नहीं मैं बताता हूँ why it matters. So
हाँ सर
so I think you got the wrong end of the stick somehow. So let me explain. कार्लाइल ने पिरामल एंटरप्राइज में एंटर नहीं किया था. कार्लाइल bought a stake in Piramal Pharma when it was part of the overall Piramal Enterprises pre-demerger, and this is all public data, so you can Google and check. So Carlyle entered Piramal Pharma. They bought certain stake, and Nandini Piramal on Business Channel confirmed that yes, they will be deleveraging on the back of these funds. So
and
ये सब
deleveraging she mentioned only for Piramal
Pharma.
Pharma
So Nandini is Piramal Pharma, correct? Because Carlyle क्यों आया था? Carlyle Pharma में ही आया. वही तो मैं कह रहा हूँ. Carlyle never bought the consolidated business. Carlyle ने कभी consolidated business में enter किया ही नहीं. आप ये सब गूगल में है. आप you can go through all those disclosures. वो BSE में सब मिल जाएगा आपको.
Sure, sir. I don't track pharma companies, so
नहीं, no problem.
Yeah. Thanks, sir. Thanks.
No problem. Welcome.
उस समय डेट कितना था पिरामिड फार्मा में, if you remember?
तो
Or I will check
वो
on
merged entity disclose ही नहीं किया ना आपने वो तो कभी.
अच्छा.
But you look at the characteristic of this business. Fundamentally, all the three divisions, other than the OTC is in capex mode. Other than OTC business, all the businesses are generating free cash in a steady state. चाहे वो CDMO हो, चाहे you look at the comparable peers on the CDMO side. और कॉम्प्लेक्स हॉस्पिटल जेनेरिक 17% CAGR से ग्रो कर रहा है, तो हेल्दी बिजनेस. आई मीन नॉमिनल डेट इज फाइन relative to operating cash flow, but not something as horrible as 4,500.
Okay.
तो ये तो गोलमाल है.
I'll read about it because
I don't. हाँ, ये तो this is not walking the talk. I mean, I'm sorry, but that's how I see it. Again, everyone has got their own sort of right to be wrong, and I could be wrong, but that's my opinion and that's my perception. And disclaimer, I mean, there is no buy, sell or hold recommendation based on whatever I'm discussing. I'm not a registered financial advisor. I'm definitely not your financial advisor. So consult whosoever is qualified enough.
और just one thing, ये जो stake sale था from Pharma to Carlyle, it was fresh share which was sold.
नहीं, promoters sold a part of their stake, I believe, not the fresh.
तब सर मैं अभी भी confused हूँ. It doesn't matter as a shareholder of
No, so they split the businesses. See, they were reporting it as a consolidated, but underneath. करेक्ट. सो दे वर रिपोर्टिंग कि फार्मा में कितना सेल चल रहा है, फार्मा का क्या मार्जिन. यू गो थ्रू जो पिरामल एंटरप्राइजेस के ट्रांसक्रिप्ट्स हैं, आप पढ़ो उसको. उसमें बताते थे वो कि एनुअल रिपोर्ट में भी इनफैक्ट कि फार्मा का सेल इतना हुआ है, फाइनेंशियल सर्विसेज का सेल इतना है, फार्मा के मार्जिन ऐसे हैं, फाइनेंशियल सर्विसेज के ये मैट्रिक्स हैं, सो ऑन एंड सो फोर्थ. बट दे नेवर डिस्क्लोज्ड कि फार्मा में कितना डेट है प्री डीमर्जर एंड फाइनेंशियल सर्विसेज की क्या पोजीशन है बैलेंस शीट की. ये कभी नहीं बताया. ये
Okay,
जोकर इन दी
okay.
पैक निकला.
Okay, I still have
Right.
doubt, but मैं किस हिसाब से प्रिंस, हेलो हेलो.
Yeah, Ravi.
Yeah, I still have one doubt. Uh, uh, I think the case is in this way. Say when the transaction happened between Piramal promoter and Carlyle, it was a merged entity. It doesn't matter where you put the debt, where you put the cash. As an equity shareholder, we were looking at Piramal Enterprise only. That was in 2020 types. Uh, and then you have a strain of the COVID time in 2021. And in the meantime, I guess they, or maybe even before that, I don't remember, they acquired HFL assets also. So on a merged entity where the shareholder interest was there before 2022, this didn't happen. And in 2022, when the entity can take what portion of that. And I'm not very sure if the listing is mirror listing. If the listing is mirror listing, then also from the equity shareholder point of view, I won't say there is anything wrong if they, after 2021 COVID, they decided some extra portion of that can be supported by the instead of though now NBFC and Pharma both are performing badly. Pharma maybe because what Sajalji is mentioning about the operating margin falling, and Piramal Enterprise has another problem. Their stage three assets on the NBFC side. But I will still study. Mine, I will only say, Sajal ji, आप ये check कीजिए कि since it was merged entity till 2022, एक shareholder को फर्क नहीं पड़ना चाहिए because he can't split between enterprise and pharma before it was demerged. कि कहाँ पे डेट ज्यादा जा रहा है या कहाँ पे कैश ज्यादा जा रहा है. हाँ
Ravi,
सर.
नहीं,
हाँ
let me interrupt you. No, I got your question. Let
हाँ.
me interrupt you. Biggest shareholder को फर्क पड़ा बॉस. कार्लाइल को फर्क पड़ा. कैसे बोल रहे हो आपकी फर्क नहीं पड़ना चाहिए? कार्लाइल ने नोट देके स्टेक लिया फार्मा में, एंटरप्राइज में नहीं लिया था उसने स्टेक. दे नेवर बॉट एनी स्टेक इन दी ओवरऑल बिजनेस. तो लार्जेस्ट शेयर होल्डर जो है इन पब्लिक कैटेगरी आउटसाइड प्रोमोटर्स, उसको तो फर्क पड़ गया ना. यू
हाँ
टॉक टू
उसीलिए
एनी
मिरर
कार्लाइल
लिस्टिंग
पर्सन.
के या इवन उसके बाद इसीलिए आई गेस मिरर लिस्टिंग के बाद
आप हाँ
प्रमोटर स्टेक
आप
डिफरेंट है.
हाँ आप जाके
43 है एंटरप्राइज में और 33 है
के
इधर.
इन्वेस्टर से बात तो करो एक बार. सी कि आप
हम्म.
हाउ आर दे फीलिंग टुडे.
ओके ओके.
Not because the stock price has plummeted. Again, let me clarify. How are you feeling today, Mr. Carlyle? Not because the share price of Piramal Pharma is half of where it should be, because you know how you think about the integrity. वो थोड़ा सा मुझे doubt है. I mean, again, that's my perception. I'm not accusing anyone here. I mean, management has got all the wisdom. They have been running the show for decades, right? So
हम्म.
they must be having some valid reason. And again, I repeat, it's a credible management. They, I mean, 17% से complex hospital generics को grow करना 1 साल 2 साल नहीं, 10 years. It speaks volumes. I mean, look at the headwinds that have happened in this generics business. 2015 से कोई भी वूली मेहमत जो है वो हाई नहीं बना पाया excluding Cipla. So there has to be some reason, right? So they have taken, grabbed the bulls by the horns in that generics business, and they still have managed to grow it at 17% CAGR. Lupin तो नहीं कर पाया, Aurobindo तो नहीं कर पाए, बहुत सारे हैं. तो कुछ तो बात है मैनेजमेंट में. तो मैं कॉम्पिटेंस और कैपेबिलिटी पे बात ही नहीं कर रहा हूँ. That I agree. Any
Yes,
more
sir.
questions?
No. I take your point. Carlyle point of view, it must have been hurting them. Yeah, that's true. क्योंकि प्रमोटर का स्टेक दोनों एंटिटी में अलग अलग है. दैट आई एग्री. Yeah. Thanks, sir.
No problem.
Question you
Any
can
more
ask now.
questions? Otherwise, I will go on mute.
Sajalji, I have a question if Prince allows me.
Yeah.
Go ahead, go ahead.
So, Sajalji, this is regarding another demerger story which has unfolded very recently in the chemical space, Aarti Industries and Aarti Pharma. What's your take on the residual business of Aarti? I mean, they have already given a guidance that the margin will remain depressed for another 2-3 quarters. The stock has already taken a beating, and the capex cycle is still going on. Do you still think that there is some value remaining in the industries?
नहीं तो मैंने इंडस्ट्रीज को कभी ट्रैक ही नहीं किया क्लोजली. सो I've never been invested in Aarti Industries. मैंने इसको कभी ट्रैक ही नहीं किया. So I don't have a view on Aarti Industries. But generally for the whole chemical space, I think the story is intact. The next 1 year or maybe 6 months or whatever will be tough because of these global supply chain challenges and this European Ukraine crisis that is happening. So near-term disruptions hoga, base is high, and that's why I kept tweeting about these high valuations of these chemical IPO companies. कोई 50 times price to sales पे, कोई 10 times price to sales पे. नवीन फ्लोरीन को गाना बजाया जा रहा था, 4500 के आसपास का भाव था. तो it was closer to 15 times price to sales, and there were buy reports chhap rahi thi and all the rest of it. So if you have been following me long enough, you know that I've been tweeting rigorously about these high valuations, not just in spec chem but even in the technology companies and this so called quote unquote new age businesses. अभी कौन सा new age अभी सब आ जाए धरती पे.
जी जी, मैं आपको फॉलो करता हूँ एंड आई हैव सीन ऑल दोस ट्वीट्स, बट आरती बीइंग वन ऑफ द लार्जर प्लेयर्स, आई फील द
नहीं
काइंड ऑफ
स्पेस
वैल्यूएशंस
सी
व्हिच
स्पेस है. सो टेलविंड्स गायब नहीं हुई. देयर इज नो स्ट्रक्चरल प्रॉब्लम विद द केमिकल सेक्टर. लेट मी बी वेरी क्लियर. वैल्यूएशन का प्रॉब्लम था, प्लस दिस नियर टर्म अर्निंग्स चैलेंज एंड रॉ मटेरियल प्राइस इन्फ्लेशन, इन सबके ग्रॉस मार्जिन्स हिट हुए हैं. दैट्स अ नियर टर्म पेन. Some stocks have corrected, maybe some further correction, maybe some time correction now, if not price correction. Assuming that Nifty stays close to 18,000 mark. Again, if market ही पूरा गिरेगा तो सब कुछ गिरेगा, तो HDFC बैंक भी गिरेगा फिर. But
that's
otherwise,
liquidity driven. I mean,
structurally, I don't
structurally,
see
yeah.
any challenge.
All right. Thank you.
Yeah, no problem.
So we have first questions.
Yeah, hi Prince.
Yeah.
Yeah, thank you, Sajal sir. Thank you for joining this spaces. In fact, so the question that I have is, as China seems to be now slowly opening up, may not be right away in the next few weeks, but hopefully in the next 3-4 months. So how do you see that impacting the Indian API players in the in the next couple of quarters in
I
terms
think
of positivity?
that should positively impact.
Okay.
Because China opening up means that their factories will be up and running, the shipment, the logistics issues. So Baltic Dry Index is already back to aa gaya wo dharti pe. So all those factors are positive for the API industry because majority of their KSM intermediates by and large are still getting imported. And if Chinese factories are back and the price, the raw material prices mean reverts, that's positive for API industry, but that's also positive for the branded generics because they are getting a 10% price rise. Inflation linked है, WPI से linked है, plus उनका raw material उनका भी महंगा हुआ था, तो उनको वहां से भी benefit मिलेगा going forward. So I think all in all, pharma sector के लिए China opening up is positive.
Great, great. Yeah, that's what I was thinking, but I just wanted the confirmation from you. Thank you, sir.
Sure, sure. No worries.
So, Sajal sir and Saurabh, there is one question each in the comments. I read it out and then we close. So the first question is this is from Rich Shah. He's asking your views on Advent deal for Suven Pharma and going forward merger of three unlisted entities of Cohen's Life with Suven Pharma.
So is it for me or Saurabh?
Sir, this is for you. Saurabh के लिए दूसरा है which I
ठीक
read
है.
out.
No, no, I'll take that. So again, disclaimer upfront that I'm an investor in Suven Pharma, so I may be biased. I've got vested interest, but see, the Cohen's का जो इसका जो का ये जो private equity है, I like those people. Right, I can't remember the name. There's a lady, Shweta, was it? Some whosoever that person is. So she is competent. I like her. I think they are they are definitely better than some of the other private equity players who have entered the pharmaceutical space. So buyer side में concern नहीं है. They their CDMO exposure is rather limited, if I'm completely honest. अभी इन्होंने 2-3 companies recently acquire करी थी, and they rebranded all of them. They merged those 3 companies together, and that's how Cohen's was born. And जो Cohen's का margin है वो भी I think it's much lower than इसका Suven Pharma का margin. So Suven is operating at north of 40% EBITDA, and Cohen's current margins are about 20-25%. So merging the two businesses together will definitely dilute the margins of Suven Pharma, but the console business will be stronger. The promoter pedigree, because they can then use their network and all the rest of it. Plus सुवेन के पास एक बिजनेस रेस था जो मैंने कई बार ट्वीट किया है कि इनके मॉलिक्यूल कंसंट्रेशन था. So a lot of their cash flow is coming from a select handful of molecules that are about to at some point go off patent. I think एक तो next इसी साल होने वाला है. So वो जो north of 40% margin है, that will also come down. So plus now that Cohen's has got the ability to manufacture in large volumes, they've got large reactor volume, वो life cycle management में जा सकते हैं. So they may still call it as CDMO, but when the molecule goes generics, we know that it's not CDMO, it becomes a CMO, right? But then the business can stay within the group. Otherwise, वो कहीं और transfer करना पड़ता वो business, क्योंकि Suven Pharma is only for, it's a pure play CDMO. Innovator side में ही operate करते हैं वो, whether it's specialty chemicals or pharma. तो वो एक एंगल है. प्लस सुवेन फार्मा करेंटली इज नॉट इनटू एपीआईज, वो इंटरमीडिएट्स में ही तो हैं. तो कोहेंस एंट्री विल आल्सो गिव देम दैट लेवरेज की अब. सो ओवरऑल आई एम हैप्पी विद the way things are progressing, but I am not too sure about कि blended basis पे margin कैसा होगा. प्लस CDMO स्पेस में कैसे स्केल अप करेंगे, बिकॉज एज आई सेड इनकी कोई लॉन्ग स्टैंडिंग हिस्ट्री नहीं है प्राइवेट इक्विटी की इन द CDMO स्पेस एज सच, एंड it's not an easy space to crack, let me be very honest. So we'll have to wait and watch, and I'm also doing this wait and watch. So yeah, again, no recommendation.
Right, sir. We got few more questions, but first I come to Saurabh and then take. So, Gaurav, the question is on the gold finance sector, and let me find where is it. So, basically, he's asking about view on the gold finance sector companies at current valuations. Yeah, this is from Sanjay Dudeja. Saurabh, this question is for you. Okay. In the meantime, Sajal sir, 1-2 more questions are there for you. So shall I read them out?
Prince, I missed, I think,
Yeah,
almost for
sure.
a
Because
minute.
I would like to drop off after those questions. So maybe I can. I've got 5 minutes. I can take one or two more.
Right, right. So, okay. Question is on this is from Rishikesh Kamath. He's asking, how do you differentiate between CDMO companies that work with innovators and generic businesses?
हाँ, तो डिफरेंशिएट देखो, बहुत इंडिया में तो वही मैंने आप वो वाला सुनो ना, ट्विटर स्पेस जो हमारा हुआ था, जो इसके एक्सीडेंटल इन्वेस्टर की पिन ट्वीट है, आई थिंक वो, तो उसमें समवेयर इन द मिडिल पोर्शन आई हैव एक्सप्लेन द जेन्युइन इनोवेटर बिजनेस। वो आ, या अल्फा सीरीज 25 देखो, मेरा Q&A सेक्शन टुवर्ड्स द एंड ऑफ दैट Q&A, I've given a metric of the gross margins. So gross margin is a very simple metric to use to figure out, what kind of business is this. An innovator CDMO will have gross margins in the range of anywhere between 70 to 80% gross margins. ठीक है ना? If you are doing manufacturing of or development of on patent molecules for innovators, your gross margins will be somewhere in the range of 70 to 80% at the gross level. And then very few businesses in India are pure play innovator CDMO. So they do generics, they do some do Loras का जैसे example लो, formulation भी कर रहे हैं, वो generics भी कर रहे हैं, plus वो innovator CDMO भी कर रहे हैं. So again you do अब ब्लेंडेड बेसिस पे आपको ग्रॉस मार्जिन देखना पड़ेगा, तो वो ग्रॉस मार्जिन ब्लेंडेड बेसिस पे 70% तो हो ही नहीं सकता, बिकॉज आपका जेनेरिक्स वाला बिजनेस इज लोअर मार्जिन, योर फॉर्मुलेशन बिजनेस जो जेनेरिक फॉर्मुलेशन है वो दैट इज ऑल्सो लोअर मार्जिन, सो यू गेट अ ब्लेंडेड. बट अगर कोई बिजनेस ये बोल रहा है कि मैं प्योर प्ले इनोवेटर सीडीएमओ और मेरे ग्रॉस मार्जिन 50% है या 55% है, तो आप समझ जाओगे झूठ बोल रहे हैं. So that's a very simple yardstick. You don't have to have any sort of scientific background or any sort of domain knowledge. इसमें दिमाग लगाने की जरूरत नहीं. You just go and check the gross margins and then see how many different business verticals they have, and just do an industry average की generic में कितना. So generic API का margin, again if you are selling in India, तो 14-15% मार्केट मार्जिन होगा एबिटा पे, और 30% मार्जिन मिलेगा ग्रॉस पे. जेनेरिक एपीआई कमोडिटी की बात कर रहा हूँ. सो लेट्स से एन IOL और एन आरती ड्रग्स, इनका 30-35% ग्रॉस मार्जिन रहता है हिस्टोरिकली. थोड़ा बहुत अप डाउन चलेगा बिकॉज कमोडिटी है ना, तो वो स्टेबल मार्जिन कभी नहीं रहेंगे, बट बाय एंड लार्ज वो 30-35% की ब्रॉड रेंज में ही रहेंगे. और उनका एबिटा मार्जिन रहेगा 15%. 20% हो गया तो उसको आप नॉर्मलाइज कभी मत करो, बिकॉज 15% लेके चलो, तो वो पता चल जाता है कि देखो जेनेरिक वाले धंधे का ये मार्जिन्स हैं, और बाकी इनोवेटर वाले में ग्रॉस मार्जिन जैसे 70 to 80% होगा प्योर प्ले इनोवेटर का, और ऑपरेटिंग मार्जिन्स कुड बी एनीवेयर फ्रॉम 30% to 50%. एंड इट्स अ वेरी वाइड रेंज, एंड द रीजन इज देयर आर सो मेनी फैक्टर्स कि आपका कितना वॉल्यूम है, आपकी फिक्स्ड कॉस्ट कैसे स्प्रेड हो रही है ऑपरेटिंग लेवल पे. सो it EBITDA margins could be as high as 50% in certain products, and as low as 25% in certain products, but on a blended basis हम ये मान सकते हैं कि 35% 40% का स्टेडी स्टेट मार्जिन एबिटा बेसिस पे आना चाहिए, जो कि हमको दिखता था सुवेन फार्मा में जब मॉलिक्यूल्स ऑफ पेटेंट नहीं हुए थे उनके, या नहीं हुए हैं अभी भी. तो दैट्स हाउ आई फिगर इट आउट. इट्स एक्चुअली वेरी इजी, दिमाग ज्यादा नहीं लगता है.
Right.
Any more?
Sir, there are questions, most of them stock specific, and one is on Max India.
वो छोड़ो यार, स्टॉक स्पेसिफिक तो हम रोज ही ट्वीट करते हैं. रोज स्टॉक में 10 नाम तो रोज ही बताता हूँ.
So for the attendees, like whichever questions you are writing, those were already covered in the previous spaces, and that is available over YouTube channel. I'll share the link after this spaces so everyone can revisit. And in case any view changes, sir, either tweets or he explains in sessions. So Saurabh, you got free or?
Guys, and then I would like to take leave, and thanks for having me. I really enjoyed the session and definitely look forward to the recording, because Saurav has got a lot of wisdom, so I look forward to the recording because I missed the initial part, and I'm sure there will be other questions coming up as well. So yeah, all the best. Thank you. Bye.
Thank you so much, sir.
Thanks a lot, Sajal sir, and we always
Bye
love to
bye.
have you.
Thank you. Bye bye. Bye.
Bye.
Thanks.
Yeah, so the question was on gold finance at current valuations, if you carry any view on that.
Frankly, I'm not tracking, yeah. So I have tracked Manapuram 4 5 years back, but I'm not tracking. And tell you reason because it has to come either in my fundamental scanners or technical scanners at a certain point of time. I know technically Manapuram did bottom up around 1995 rupee, but I'm not tracking because there are still I find relatively first I build my positions in different companies earlier, and I don't want to jump too frequently without understanding the business. But one thing I can say that last 2 years back, when the whole COVID thing happened, all the banks, if you look at their gold financing portfolios, all of them went aggressive because that is where they could lend in COVID. But even there, we need to understand it's not like bank is going and targeting the same customer which Manapuram or Muthoot is doing. We need to see at what rate they are lending. Because some of the banks they were lending at a very different rate, very lower rate, which tells about the risk of the target audience. But given now economy is back to normal, the normal other lending channels, I mean lending avenues are firing. Uh, my understanding is the intensity with which banks were lending on the gold side, that intensity will come down, and that should help the gold financing companies apart from the rising gold prices and all. But beyond that, I have not tracked in detail as of now. And also you need to take care of some of the other businesses some of these gold finance companies were holding, because there were times when the gold financing business was doing well, but the microfinance and all, if you specifically look at Manapuram, that went through a horrible period. And I have tracked for 5 6 years, and there was always management was coming up, monsoon take नहीं हुआ, फिर demonetization हो गया, फिर ये हो गया, फिर वो हो गया. And there were always reasons given for underperformance. So though value wise it might have some value, but we also need to look at how the other businesses will do. And my belief is the microfinance business might do better than gold finance because, as I said again, the banking cycle is coming out of 4 years of bad period, and everything is firing. The NPAs are going down, so expect those side businesses to do well. But beyond that, I'm not tracking as of now closely.
Right. So one question is from Ravi Nambiar. How will Cineplexes fare versus OTT in a post-COVID world, considering the revenge watching, etc.?
So I think good movies are doing well. So Cineplex, I believe you're talking about Cineplex, the business which again they have come out in the market after 10 years, right? Earlier they had sold it off and they had a 10-year contract that they will not get into movie business. And now they have come and they're acquiring assets, right? Same company, right?
Right.
Yeah. So see, apart from the normal OTT versus this, a lot of other things have also happened in that business, and they're in the scale-up phase. And what I have studied a bit, and what I remember, they have to sell some of their assets. There are certain hotels they will sell, and post sell-off of those assets, that capital will be used and it will be deployed. So at a company level itself, we need to look at those things, that how they are executing their plan, what they have promised, and all, when that deal will happen. I think one asset they have sold also, so that is one part we need to look at it. But movie, my belief is, the market is, it's not like, and it's very difficult to prove without data, and I don't know if there is enough data. But I think these kind of discussions always happen. But typically, life goes on. People go to watch good movies, and OTT will also emerge as a channel. The only difference I feel is what will happen will. Uh, Movie theaters will be used more for those kind of movies where graphics and storytelling and visual, those are more important. And OTT will more emerge as a as a platform to consume diverse content. But I don't see any way OTT coming and replacing movie theaters. See, even when we have these kind of group discussions, WhatsApp discussions, people will tell, my family has stopped going, the other person keeps telling, no, we are going. I think these are all sample biases. We will need to look at some strong data. The current discussion has been more around regional movies coming and breaking the Bollywood and all of that. But still, you have blockbuster regional movies doing well, doing that 300, 500 kind of crore, and some of the foreign movies which have come, they have really done well. So I think both platforms will be there. It's not like something will get replaced. But coming to Cinepolis, you have to specifically look at their scale up plan, how they're executing compared to the plan. There is asset sell off plan, whether that is happening or not, whether all the cash generated by that sell off asset is being deployed in the company or not. And then look at it how the industry is doing, the multiplex industry versus OTT, how they are doing, and is there any structural shift which is getting, you know, uh, reflected in the numbers on a continuous basis. Currently, I don't think any of those signs are visible.
Right. So, Saurabh, almost 2.5 hours. How good we are on time? We have few questions, but if you allow, we can take them in last 2 minutes.
Yeah, it's 10:23. Let's go till 10:30, and then we can stop.
Right.
And then
So,
people can type their questions. Still, you can type your questions in the Twitter thread. In next 2 3 days, I will try to find time and I will answer each of those questions.
Great, great. So I read it out and we get quick questions and quick answers. So Sunny Kumar is asking, presently, what are you doing in IT sector, chemical sector, and pharma sector?
Okay. So IT sector, see, one more thing I would highlight. Typically, the expectation is once a sector is corrected, it should do a V-shaped recovery. Uh, it doesn't happen that way. Most of the times, it goes through a phase of consolidation. I don't know how many of you invested in IT. So I was invested in IT in between 2016, 18 once. And that was the time when all this machine learning picked up in a very big way. And the general perception during that time was manpower is not required. So IT employees are not required. Sab computer apne aap kar dega. And there were companies available. So all your Tata Alexis and Persistent were available at a valuation of 12 to 14x, and still there was enough pessimism and nobody was willing to buy. So there are different kind of risks which emerge. We don't know. Some risks are expected, some risks are unexpected. The expected risk which I see right now is more in terms of margin, more in terms of global uncertainties. If we look at last quarter con call, everybody was still like, the shit has not, hit the ceiling. But when you look at all the other sectors, like if you see the chemical sector, API sector, if you read the conference call transcripts of many of these industries, or if you look at the US companies, Walmart and all, everything is not well, and there is a lot of pain going on. It could be that IT could be the last sector to get hit, and still we need to wait and watch 1 2 quarters to see if that is happening. In terms of product company, anyway, this is happening if we see the layoffs and all it going on. But services company, we have not yet seen it. My sense is even if we look at 2008, US going in a recession, it's not that bad for IT. How it will look like that all business will go, but because still they will have to outsource the necessary work and it will go to a lower destination. But your fight for margin, your margins, margin fight and all of that may happen. And also you're coming out of a year when you had exceptional margins because the reasons I said in the beginning, people were not traveling. Just go to because my wife works in IT company. I worked for 15 years, so I have friends I know. Just ask them the kind of travel which is going on, and just go through the P&L and see what is the percentage of expenses which sales and marketing, travel, these kind of things happen. So these things will have an impact. There will be again a margin normalization. The problem, the bigger worry is, will revenue growth continue, or that will also, lower little bit because of the things which are happening in US, UK. Till last con call, it looks like it has not got impacted, but it may get impacted. I think HCL came up with some of the latest announcements, and the price went down. So margin wise, I am not very gung ho. I feel still some pressure will be there. Revenue wise, also some concerns are there. And usually, when sectors get out of favor, momentum doesn't come. So, my sense is, I think we have seen a price bottom, maybe 10 to 15%, one more round of correction, and we should see the price bottom. And currently, we are at that psychological support level if we look at the IT index. Valuation wise, mid cap, I still believe the froth is higher. The large cap companies like your
Infosys and HCL, I still feel they have come almost closer to the value. Maybe a 10% correction will make it fair, but I don't like to time it, so I like to buy staggered. Uh, it is more the time correction where I'm worried, because the big moves don't happen, just like that. The big moves need big money to come in, and that rotates. I don't see that kind of sign coming. It may go through 1 year of consolidation, but I believe in next 6 to 12 to 18 months this will start becoming interesting. If even if a single digit EPS growth is maintained, and if there is no price up move. So this is how I'm seeing it. So I'm studying IT sector. I'm trying to find differentiated companies, or companies which are closer to the fair valuation band, but it's a very small start. I have allocated hardly 2.5 to 3% into companies, and little bit in the IT index itself. But I don't have a very strong positive or negative view. I think the problem is we always look for the good or the bad, but there are many times when nothing happens. If you see the uptrend market, downtrend market, but you also have something called a range bound market. I think IT sector in that phase where it will go through a time correction, maybe 6 months, 1 year, 1.5 years, and slowly it will start becoming attractive. That is my view on the IT sector. There was one more question, or this was the only one?
Yeah,
Yeah,
there are.
API and chemical and pharma. Yeah, so I believe there is a valuation attractiveness in the API sector. Chemical is very selective. There are chemical companies which I feel, despite of 30% correction, there's a big froth, and there could be certain companies, but it is more around the back end API and all where I'm finding bigger opportunities. And why it has happened, I will tell you. It happened because they've gone through 50-60% price correction. And again, why that has happened? Because the same companies went through lifetime high margins in 2021, and these are all different scenarios which emerged out of COVID because of need of medicines and pharmaceuticals, and then the whole supply chain got disrupted, and the whole inventory build-up happened, and that inventory cleaning is happening, and because of that inventory write-off is happening, and the supply chain disruption, the margins have gone low. So within 2 years, from a lifetime high margins, these companies have gone through lifetime low margins. This could be pharma API, this could be chemical API, pet related ancillaries, and all of that. But many of the companies have gone through a time where from a lifetime high margin there to a lifetime low margin. And either the lifetime high margin was sustainable or the lifetime low margin is sustainable. I think the truth lies somewhere in the middle. So because of the possibility of a margin lift up, uh, possibility of whatever 8%, 12% growth, depending on the sub-segments where we operate in the industries, and then because of 50-60% price correction, some pessimism, maybe some not re-rating, but the valuation will catch up to normalized value. Now, the problem is it may not happen in 1 quarter, because still we don't know if these are margin bottoms. The signs I'm getting after reading the con call and after crunching the data, looking at it, we might have already seen the worst quarter in terms of margin, but still it might take 2-3 quarters. The other thing which is happening is some of these companies are going through a revenue mix transformation. So when I say revenue mix transformation, it could be in terms of risk diversification, where 80% of revenue was coming from two APIs, and now 5 years down the line, these two APIs will contribute only 50% of revenue. So see, your risk, the company has become more stable, and somewhere in terms of valuation, all of these things impact. All these things, your geographical risk diversification, product diversification, everything has an impact on your valuation because it adds to the stability and volatility of the business. So my suggestion would be look at the businesses where the business is shifting from maybe a very commodity API to little bit higher in the value chain, or a business is diversifying from a single product dependence to a multi-product dependence, or the business is diversifying from one geography to multi-geography, and it may not be reflected right now. Some of these companies are going through huge capex at with internal accrual despite of being lifetime lowest margin. So these are stories where if you play with a 2-3 year kind of view, where if you spend next 1 year accumulating and then wait for 2-3 years, and again if the cycle comes in favor, the margin normalizes, and market respect the revenue mix change or risk diversification story, you might get a better valuation. But I believe this is one of the interesting sector which everybody should study. Some of the companies I am studying, and some of the companies may not be a very good quality company. I mean, they could be still be cyclic companies. These are companies, any API company, most of the companies I would like to buy at a price, sell at a price. But some of the low quality cyclic plays, because they are at a stage I'm interested to study. I'm studying all the Aarti Group companies. I'm studying Jubilant Group companies. I'm studying IOL Chemicals, Lakshmi. I'm studying Sudarshan, Asahi Sangwan. So these are some of the companies which I'm studying. Pharma is always very, very selective. Every business is very unique. I try to play more techno funda by understanding it, and it remains selective. Right now, I think Indoco was one company which went through a lot of correction, and I felt it had, some margin of safety again based on, the business valuation and fundamentals. And, they have gone through a pain period of all their US FDA issue. They came out that capex is being utilized, the domestic business is doing well. RPG was another one. I invested around 550, but I have not, in fact, added my positions. So these are very selective businesses. Newland, you saw 5, 6 quarters back, there was the best quarter, and then within 4 quarters, the margins were so bad. Against last quarter, it was very good. So pharma companies are very, very tricky. One need to either enter at a very attractive valuation, or you need to have a very long-term view. Accordingly, you need to build a picture. But these are some of the companies. There's one more company, Gufic. I have studied. I have some position, but I know nothing major will happen in next 2 years. But after 2 years, because there was a there was a significant, and management was honest enough to highlight that okay, there is a COVID impact of revenue, and we are not going to get this revenue back. So even if we are growing at 15% because of that impact, we might be flat. And then there are certain triggers which will play out after 2 years. Plus, there are certain optionalities in business. So pharma, you have to take business by business, study it. Syngene has gone through a lot of capex, and still the whole operating leverage story is yet to play. But you have to look at the taxation part. So the top line might increase, but just go through the details of con call, understand how the taxes are going to increase. So it's very difficult to say. But yeah, as a cycle, pharma has not done that well in last 2, 3 years. But still, it has to be a selective pick, and we have to look at each of the stocks selectively. API is an industry; it's at bottom margin. Good time to study the industry, and the other one I already highlighted IT in detail. Yeah. I think we have exceeded 10:30 also, because it's very difficult to, if you give one line answer now, you'll miss a lot of things. Like in Sinjin, if I don't tell about tax part, it's very difficult. So I want to be detailed and answer one question rather than answering 5 questions and missing the important things.
Saurabh, our attendees are so smart. They have named all the sectors which can pan out for another 1 hour. So in the want of time, we take one last. Any view on refractories you have?
Any views on?
Refractory.
I don't track, yeah. So I don't track, so it's very difficult to comment.
Right. So we will be closing now. It was a terrific session, I must say, and so much full of insights. So Kumar Saurabh, before we close, I'm getting few messages like, could you please brief about what you do at Scientific Investing, and how, if someone wants to connect, they can benefit it from?
Yeah, sure. So we run this venture called Scientific Investing. Our website is so we have an education business, and our website is learn.scientificinvesting.in. Also, we have a YouTube channel with Scientific Investing. And being a hybrid investor, we cover through multiple courses. We have courses around fundamental analysis, around technical analysis. I have been a financial consultant from 2010 to 13, and then I have been a data scientist from 13 to 20. So I am good at business. I am good at coding. So because of that, I have interest in quants, and also we have courses around quantitative. If somebody wants to build systematic algorithms, leveraging the trading technical analysis knowledge. So we have a lot of courses, learning tracks. Then we have a annual membership where we do these weekly community meetups, stock study, sector study, market study, technical study. Like right now, we are running a super session series to learn technical analysis in a CMT way, which is a CMT charter. So a lot of this business, this education business, where we cover hybrid investing, that is what we have, and you can check on learn.scientificinvesting.in. The other interest is more on the advisory side, but till last year I was working, so I have been a full-time investor plus setting up these businesses from last 1 year. So the advisory thing is still in progress because in India the license takes its own time. So that's something which is work in progress. But I hope at a certain point of time in future, maybe in next year, if everything goes well, that will become the second part of business. I'm hopeful. So this is what I'm doing, and I like to, do technofunda. I like to build algorithms. There is something more which I am working is data as a service, where uh, like a lot of things I spoke about right now. Like I spoke about that data lab. Like in there has never been a period where in 25 months continuously small cap index has not fallen more than 15%. Now this can become a very important insights, but how I communicate to the audience, to the people. So we are working on something called data as a service, where we want to highlight market insights of these kind at a market level, at an index level, at a sector level, at a stock level, so that people are better aware and they can take better decisions. So that is another thing which is in progress, should take 4 to 6 months. So these are the kind of work which we do on scientific investing. I'm there on Twitter and YouTube, and that is the our website. And these are the two businesses we are interested. So that's the brief. Hello.
Saurabh, before you close, can I ask a couple of things?
Uh,
Just
yeah, sure.
not
But
asking
if
actually, not asking actually. I just want to know if you are studying Aarti, would you be posting it somewhere? I mean, I can access it, or you want me to get on a call with you?
sorry, could you repeat?
If you are studying Aarti group, you mentioned no. So you are
So
studying
there is
Aarti
one
group.
company I have already studied, Aarti Drugs, and the YouTube video is available. So Aarti Drugs video, you can go through the YouTube channel, and there are other Aarti Group companies which is still work in progress. So I think there is a webinar which I will be coming up with. I will be again partnering with one of my colleagues, and we'll be doing a webinar on API in chemical sector, maybe in next 1 month or max 1 to 2 months. So that is where we will cover a lot of companies, including Aarti Group companies. Working
ठीक
on
है
it.
ठीक है if it will be
Yeah.
available to access, then it's fine.
Yeah. Prince, are we done? Uh, Prince, are you there? I hope I'm audible.
Yeah, you are audible. Prince is, I think,
Looks
not
like
able to
we have.
unmute.
Yeah, yeah. Okay, so by the time Prince comes again, as this topic was FOMO, so again my request would be give importance to valuation. And again, I'm seeing a second cycle of IPO coming. So we know what happened in the last cycle, and Sajal sir was also talking, and I have also posted. In fact, Nika the employees were selling. I mean, crores of shares Nika employees were selling. Again, the whole thread which I created, those examples are there, and more such IPOs are coming. There are certain IPOs coming where the whole fin influencer community, they're asking for interaction, whatever be the intent. That's the second question. But be very sure of the valuations you're playing. I did a webinar on